Good morning. This is a meeting of the Hamilton County Council. It's Tuesday, September the 1st. The reason for this meeting is to review the budget for 2027. Mr. Auditor, can I have a roll call?
Ken Alexander.
Present.
Tim Griffin.
Present.
Steve Nation.
Present.
Brad Beaver.
Here.
Sue Mackey.
Here.
Mark Hall.
Here.
Amy Masalamani.
Present.
Mr. President, you have a quorum.
Thank you. Now we're going to have an invocation and pledge by me. Let's just all pray in our own way and remember the men and women of the armed services that are protecting our freedom as we speak. Amen. I pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
All right, now we're going to have a words of wisdom from our financial consultant, Mike Reuter.
Good morning, Council.
Good morning.
You should have before you a hard copy of a memo and a fiscal plan for your use. You should also have an electronic version on your computer. Now, I will tell you on the electronic version, I'll be referring to the page numbers of the hard copy in the bottom left corner. So if I say page 10 on the PDF, that will be page 14 PDF because of the memo and the cover page and the table of contents. So if I go to page 10, that means PDF page 14. So I won't sit here and read the memo to you. I don't know if you had time to review that or not, but I will hit some of the highlights. Oh, before I begin, I'm sorry. I do need to introduce Sam Vanderveen. Sam is new to policy analytics, and he has been immersed in Senate Enrolled Act 1 and has a great deal of knowledge in property tax and income tax. So Sam's joined us this morning to hear our conversation. So we have all the pieces that we need to move forward with your budget decisions. We have the certified assessed valuation. We have the certified local option income tax amount. We have the certified maximum levy, in other words, the amount of property taxes that will be allowed to be collected. Now, I will also start by saying, as a reminder, we update all the revenues in the fiscal plan, but as far as the expenses within that, it is raw data. However, it was turned in by the departments, provided to the auditor's office, and then given to me. So I've made no judgment about the expenses within the plan. I have just put in whatever the requests were. And obviously, at the end of your meetings, I will update the fiscal plan again to reflect your actions or your direction. And then you will actually have a public hearing on the budget in October and an adoption in October. So we have a lot of time between now and then before you have to take any kind of official action on the budget. But I just wanted you to know that what you're seeing is just numbers as they were turned in by the departments. So based on all that information, this is probably one of the better years that I'm presenting to you in terms of maybe of a target to balance the budget for 2027. Right now, the budget as submitted is at a balance $2,428,000. I will asterisk that, though. There has been on occasion where you have wanted to preserve the special distribution that we've been receiving. And so that is built into that number. If you decide that that's the direction you would want to go, that special distribution is $14,647,000 that I'm estimating for 2027. And so then the budget would actually be out of balance by $17 million if you were really trying to reserve that special distribution. I will tell you the special distribution has become a regular part of the budget process because it has been reoccurring. Although it's not always the same every year. It has been reoccurring based on the flow of the income taxes. One other important note, and I remind you of this every year since 2021, is interest income is still part of your revenue sources within this. That number is 15,000,004. And so it is down some from the prior year, but in prior models, I was anticipating that interest rates might decline, and they have not been declining, and I don't see that they are declining in the near future. So that number is, again, in your modeling, in part of the balancing process, and that's $15.4 million for 27. Another reminder is your general fund obviously is your largest and most flexible and operates most of the county. But when you look at the park fund and the health fund, and including cumulative courthouse, think of those as departments within the general fund. Even though they have their own separate rate and levy, they share the same revenue source. And what I have done without judgment, I have put enough property tax into the Parks Fund and the Health Fund to show you what it would take to fund those budgets. But keep in mind, if you were to reduce either of those budgets, those dollars, those property tax dollars then would go back to the general fund. So just think of them, even though they're separate rates and levies, think of them as being one fund because they share the same, they share the maximum levy. I don't normally comment on this fund, but I did notice that there is a large request in the computer maintenance fund. I've always had this in the fiscal plan, but it's always been relatively small in that it's been $250,000 or so. This year's request is for over $3 million. I was unsure of the revenue source, so I assumed that it might be a request that you would be moving dollars from the general fund to the computer maintenance fund. If you do that, just keep in mind, it's fine that you do that, but it's just keep in mind that's coming out of the general fund. It's not coming, I don't know of another revenue source unless they can share with you that there's some grant or something of that nature that is funding that. On the memo, and I apologize for this. This is late breaking news. I had on the second page of the memo, I had noted that the request for CCD was exceeding the revenues, and that we would not be able to fund all CCD as requested. But yesterday we were given notice through an audit of NDOT that the CCD fund is getting a $584,000 reimbursement that is not in this plan. So the memo is dated by one day in that you technically, if you agree with the expenses in CCD, you technically would not have to cut them. I'll show you that a little bit later. But that memo is dated by one day. And so I just keep that one in mind. Combined combined cash balances for the rainy day and general fund at the end of 27's around $115 million if you approve the budget as it stands right now. More than 50% of the next year's ensuing year property tax collection, so that's more than sufficient to begin calendar year 2028. And I'm going to start off here in a moment, but this does include a rate increase, property tax rate increase, and we've been talking about this for a while now. The effects of Senate Enrolled Act are showing up in future tax rates, and that's where I'm going to start in the fiscal plan. I apologize for my voice. I'm fighting some allergies, and so I'm losing a bit of it. So I am going to start. If you're going to the hard copy, page 30. If you're going to the PDF, it would be page 34. So for the first time in a long time, we actually saw a decrease in our assessed valuation for 2027. That was expected, and that is actually a little bit better than what I anticipated. I was anticipating closer to 5% decrease. And as a reminder of why this is happening is there are new deductions each year being put in place that is removing part of the tax base. And so in in 2025, the supplemental homestead deduction was 37.5%, and then there was a standard deduction. By the year 2031, that supplemental deduction will be 66.7%. So, in other words, to give you some frame of mind around that, if it's a $750,000 house, by the year 2031, they will only be paying on $250,000 assessed valuation. Or take a $600,000 house, they'll be paying on $200,000 assessed valuation. So a lot of the tax base of residential is being removed between 2025 and the year 2020, or 2031. There's also a new deduction that started this year for the 2% category, which is rental property and farm ground. Farm ground doesn't have a huge impact in Hamilton County as much as it used to, but they are now getting a deduction. It was zero, and now by the year 2031, that deduction will be 33%. And so apartments are now getting a deduction that was not in play before. So those things, even though we're still growing as a community and our tax base in gross numbers, in the gross assessed valuation is growing, those deductions are removing a lot of that growth as we go forward. And so as you look at this, you can see that we are down 0.71%. Now you have two assessed valuations. You have the net assessed valuation that encompasses the entire county, and then you have another assessed valuation only for the health fund, which excludes the city of Fishers boundaries. And so when it came to the total assessed valuation of the county, it is down 0.71%. And as you look forward into the future, you can see that I'm still forecasting that assessed valuation to continue to decline until the year 2030. The next page, page 31, now these are tiny numbers, and I apologize. And you've heard me say this before, and it's a mouthful, but it's actually become even more important again in that if you rewind, this is what's called the 6-year non-farm personal income factor. And that's a mouthful, but this calculation is used to determine how much property tax you're going to get in the ensuing year. And they just simply look, this is federal data. Federal data is reported. They average the 6 years, and whatever that calculation is, that's the multiplier. For the last 3 years, legislation has overridden that. For 24, 25, and 26, when I've appeared before you for those last 3 years, it was limited to 4%, a 4% increase. This is an unusual year. We have gone back to that calculation with no cap. And that is now 6%. And I will tell you that is actually the highest percentage I've seen in my career in terms of a general increase. It doesn't matter whether you live north, south, east, west, suburban, urban, or rural, or whether you're a township, town, city, county, school operations fund. This factor is driving the ensuing year property tax, and that is a 6% statewide increase. And what's driving some of that, now, Adam, I don't know if you could zoom in a little closer, and my pointer doesn't work great on TV screens, but what's driving that just to the left a little bit, just a little farther. In the years 2020 and 2021, as a state, we saw large increases. And what was going on then? The pandemic was happening, and what was happening, the federal government was pushing a lot of dollars out to try and keep the economy rolling. And so it artificially inflated those years with those higher income numbers. Those, because it's a 6-year average, it is still dragging those 2 years into that calculation. But Adam, if you'll go to the far right, the prior 3 years, as I mentioned, were limited to 4%. So that calculation is now 6%. That is now in play going forward, and I'm using an assumption of 5.2% in the year 2028. And then you can see in 2020, it's always off a year by the timing of all this, but 1.5052 would be for 28 and 1.041 would be for 29. And it normalizes in 29 because those 2 years drop off. It's out of that 6-year calculation. And so that number will not remain at 6% going forward. I will caution you even on next year's 5.2%. I would not be surprised if another cap was put in. And so that they might turn around and cap that number in the ensuing year for 2028. So just keep that in mind. Right now, this is the way the law's written, and we're back to this calculation without any reductions. I'm just putting that as a little caution flag. It is possible if I come back to you next year and say to you, hey, they capped the levy at 4% again. So not a huge swing, but just know that property tax in 28 could be a little bit less. Okay, the next page 32. And this is where you can see, you can see here for the last 3 years, this is the maximum levy calculation. About right in the middle of the page, you'll see a factor, 1.04. And so the 6-year non-farm personal income factor would have been much higher than that for those 3 given years. But again, that cap was just put in place. And then you can see going into this year that we're getting a 6% levy increase. So there are no longer growth appeals. And so this is maybe a great thing for a community that's not growing, but maybe someone that's growing 10%, 6% cap's not great for them. So in your case, 6%'s not bad when you consider the county as a whole. Actually, I'm pleased with that considering what we've been limited to for the last 3 years. Page 46, or probably 50 on your PDF. This is really good news. I'm going to start on the far left. We have a rate in Hamilton County for lit of 1.1%. A tenth of that is put to PSAP. 1% of it is allocated to all the units within the county, with the exception of schools. Schools do not get any local option income tax in Hamilton County. Not true in all counties, but in this county, we do not allocate any lit to schools. But a pleasant surprise when we received the actual collections for 2024 this spring, that number was up 15.7%. And you may say, well, 24, don't we have 25's data? We don't. If you think about it, we all just filed our returns in April, and then extensions are filed for 25. We don't know how much is collected yet in 25. 24 is the last known real collection year that we have. And this was a bit expected. If you look at the prior year, 2023, it was only up 2.8%. And you might recall me standing here last year going, I'm not saying that's wrong, but that is inconsistent with what I've seen in neighboring counties and would be inconsistent with what's happening in Hamilton County. And I did follow up with the Department of Revenue. That is protected data. You don't get access to returns. But they had indicated that there were some timing issues, that there were some taxpayers that did not get included in the 23 number, and that you will likely appreciate what 24 will look like. Well, that happened. So it went from 2.8% increase to 15.7. If you add those together, you can see that that's probably right between those 2 given years. But something important to note in my modeling of how I'm moving forward, when you look at 21 being 19.8, and then 22 being 4.6, and then 2.8, and then up to 15.7, that is not really how income is working in Hamilton County. These, in my opinion, are timing issues that when returns are getting included into that calculation. And how I'm modeling it going forward is no longer am I trying to estimate what that next year is going to be because it's been anywhere from single digits to double digits. I am simply looking at the last 10 years, actual dollar collections, not percentages, actual 10-year dollar collections, and taking that average increase and moving forward with that. I think it is a fair assumption to assume that whatever income we collected over the last 10-year period would be consistent moving forward. Now, there will be years that's going to be higher, and there's going to be years that's going to be lower. But in your particular case, you're not necessarily in a cash position that you would have to take a knee-jerk reaction to any of that. Last year, when we got 2.88%, you did have to go a little deeper in your reductions. This year is not necessarily true. And you see then in 26, slide over one column there, you see the special distribution. Because of that new 24 number, our special distribution as a countywide total went to $69 million.
And
That was
it was 40 million the year before.
correct. Yes. And you can see in the next year, I'm still anticipating $52 million special distribution based on what I just described. Now, the next column over is the certified distribution column being up 15.3%. I actually focus more on the actual collection number than I do a budget number because the actual collection number is, we always reconcile back to it, either through a regular distribution or a special distribution. So when I'm trying to model out what things look like in future years, that collection number is more important to me than that actual budget number. But that budget number looks really good this year in that it is consistent with what we would expect. Now, another big important point, and I'll conclude with this at the end of my comments this morning about potential changes in legislation that we might be talking about. Right now, Partisan Enrolled Act 1, 2025, included a lot of property tax reform, but it was a major shakeup with local option income tax as well. In that the whole model changes and responsibilities change, who's responsible for adopting those rates. That was originally scheduled to be put in place in 2028. That was in the short session delayed a year. In the year 2029 now will be the first effective year for any lit changes. You will not be responsible for adopting that rate until between July 1, 28 and October 1, 2028. So we have a couple of years to think through what that looks like. Now, from your perspective, it's really pretty easy to know how much 1% generates. And so we would be able to dial your rates in pretty easy about what it would take, what kind of rate it would take to replace your revenue. What we don't have yet in a form from the Department of Revenue is how much money is collected by municipalities. That's a new piece that municipalities can adopt their own lit rates starting in 2028, pay 29. We don't have that data. So there are some estimates based on federal data, but that doesn't always track exactly with the Department of Revenue. So just know that that's out there, and I'll talk a little bit more about that coming up here after I go through your fiscal plan. So in 29 right now, I'm assuming that you're at least going to adopt a rate that would replace that revenue. And I think that'll be a pretty straightforward decision for you when that time comes. Okay, so back, Adam, if you go to page 44. So these numbers get a little tiny. A little farther, Adam, I want to get to 27. Yeah, go down, Adam, there you go.
So is that 40 for us or 40?
I think it'd probably be 48 on the PD, should be page 44 on the hard copy,
44 on the top.
44 on the hard copy. There we go. So for the year 27, of the 1% county total, you are getting 26.6%. So if you were considering adopting a rate, if you adopted a rate of 0.26 to 0.27, that would make you whole, to give you some idea what kind of rate you would have to adopt to to replace the revenue you're currently receiving of the 1%. Now, you could adopt much higher than that. The county's cap is 1.2%. So you're very fortunate. Our income tax base in Hamilton County is very strong. The caps aren't going to be as much of an issue here as it might be in other counties. So it's a pressing matter in a lot of counties. In Hamilton County, it's not quite so pressing because I don't anticipate the caps are going to be as much of an issue for you when the time comes for adopting those. Okay, with all that said, those are your two largest revenue sources, right? Property tax and income tax. We have food and beverage. We're going to talk about that in a little bit as well. So I'm not going to go page by page, but I am going to start on page 1 now on the general fund. And there's a bit of noise going on in this fund. There's a lot of changes that have occurred, and I've tried to highlight them off the page. First being this first line where I've highlighted on a loss of circuit breaker. And some positive news about Senate Enrolled Act 1 is as those deductions have gone up for homeowners, the number of people hitting the circuit breaker, the 1% cap, it has been going down. And so that's been an interesting situation, not in all counties, but because our tax rates as a whole are lower, we are seeing fewer people actually hit the caps. And so that is a good thing. Now, the second line, the one right below it, you see it goes from 0 to 2.3 million. That was part of Senate Enrolled Act 1 in that homeowners now will get up to 10%, no more than $300 credit on their tax bill. And so an example would be, let's say we have a $300,000 house. Their maximum tax liability is $3,000. That taxpayer would also get $300 off that $3,000 tax liability. So their net tax bill would actually be $2,700 as a maximum. So that is new this year, and we're experiencing the loss from that. That is something, if you wanted to in the future, if you wanted to raise a local option income tax rate to make that up, you could do that. I'm not saying you're going to do that, but that is something you could do in a future year. So positive, we saw a positive decrease in the loss to the circuit breaker, but then we saw the new loss due to the homestead credit. This is where you really see your lit portion went from $72 million to $82 million. So again, you're getting, in the big picture, you're getting 6% increase in your levy, and you're getting the big bump from what I would actually call a lit catch up. It's more of a catch up than a ongoing 15% increase. The next line below that is your special distribution, and you can see yours went up significantly this year because it went to $69 million. But then you can see I'm dropping it back down again in the next year based on the modeling of actual collections. And then finally under revenue, I've also highlighted interest. If you go back to 2021, the county received $547,000 in interest, and now we're getting $15.4 million. So if interest rates ever fall back down to that level, you can see what that would do to your budget. Another important note now on the expenditure side, Adam, if you go up a little bit, you're doing a great job, by the way. You're like reading my mind where I want to go here. I've highlighted under the expenses health insurance, and we really didn't have a big decrease in health insurance, but in 2025 we moved, or we were directed to. We'd always put food and beverage into the general fund, but we were directed by the state that we had to segregate those dollars and put them into a food and beverage fund. And essentially, we took one line item. We took health insurance and moved as much health insurance out of the general fund into the food and beverage fund. At the end of the day, it's a wash to you. It doesn't make revenue or expenditures difference. It's an accounting function. But just know that our expenses dropped dramatically that year, not because of our costs, but because of accounting changes. Now, also, as you look at expenses, our expenses are pretty high in 26. We've done some additional appropriations, but we also appropriated the money for the land in 26. And so at the bottom of this page, you see a transfer in of $17 million. But our capital expenses are at $25 million. And so that's creating some noise in the 2026 budget. We moved it out of rainy day into the general fund, and we paid it out of the general fund. And so it's just creating some noise in what those true revenues and expenses are of 2026. But as you go into 27, then you can see that your capital budget went from 25 million, which included the land, and the requests include $9.2 million. And so if you're thinking about, well, that tends to be an easy place to kind of reduce, because you can maybe fund some of that with a future bond issue. This year's bond issue is spoken for in terms of what it's being used for, but that would be an option to you if you wanted to reduce some of the capital and move it to a future bond issue. So anything you cut out of the budget that is included here reduces the $2,000,004. So in my cover memo, I had said your budget's out of balance by $2,000,428. That's where that number is coming from. But that does include the special distribution. Again, if you decide to reserve that special distribution, then you would need to potentially reduce further, or you would be using cash balance. And you have a strong cash balance. Oh, one last thing. Kelly had shared with me a couple days ago that it's anticipated that we'll be doing an additional appropriation for debris cleanup. And that amount is on the very, very last page of the fiscal plan. $2,750,000 is what I built into the 26 number, assuming that you would appropriate that. I have not accounted for what any kind of federal reimbursement that you might get from that. So I've accounted for the expense in your numbers, but we don't know, right, what we're going to get in terms of relief. I do not have any costs of the bridge included in here. So we do have cash to cover that when the time comes, but I've not tried to model in. We have approximately what some of that cost might be. I've not modeled that in because I don't know the revenue side of that as well. That would not be considered necessarily a major bridge, so this would be something we probably have to go use either rainy day for and reimburse ourselves when we get the money, or use general fund cash balance.
All of our rainy day, all of our major bridge bonding capacity is already called for, isn't it?
There's still some.
If you
There might be
consider
a good bid that came in, it might not be.
well, if you consider that we're going ahead with the Hazeldale project, that did not have a major bridge in it, or did it?
It does. Hazeldale is a major bridge project,
Okay,
and I've
so
got that modeled in.
small amounts here or there, but most of our
Yeah.
major bridge bonding capability is already called for.
Yeah.
Just curious, you meant Hazeldale in 146, not 106.
Yeah.
Right.
Okay.
Project we already had.
Okay, I just wanted to be very
Not the
clear.
recent washout.
Yeah, the bridge in Carmel has not been accounted for in the fiscal plan.
Right. But
I did include the debris cleanup because that, I believe, is on your agenda coming up at your next month's meeting, and I assume that you would be approving that, so.
Yeah, but I was saying bonding capability coming from major bridge is mostly called for.
Mostly, I think we'll see
Yeah.
that. Yeah.
I'll share, I will show you that fund here in a moment.
Okay.
So we're planning to use some cash out of that major bridge fund and some bonding.
Okay.
It's a mix.
Okay.
And,
I
and
have one question too.
Sure.
Before you jump to that one,
Yeah.
on page one, What's the deal with the auto and aircraft excise
Oh.
tax going up by 4 million?
Good question. You'll see this later in the document.
Okay.
That was a legislative change as well. This is actually favorable, in my opinion.
I would assume so. It's
Yeah,
positive.
good question, though, good observation, but you'll see it later on. This allows you to put all of the excise tax that we've been receiving, which had previously been prorated among all of the funds, now can go all into the general fund. And so that's your most flexible fund. And now you can, as a council, say, hey, we don't want to put it all there. We want to put a little bit of it in another fund. You could do that. I've assumed that you're going to put it all in the general fund because it's your most flexible fund. But you're going to see where we did get a little benefit from that. Excise used to go to the debt funds, and that's not necessarily true. So we can put those dollars into the general fund now. And so I'll talk about debt in a bit as well. But thank you for pointing that out. Excise tax is forecasted higher here, not because it's increasing that from any new tax. It is simply, again, an accounting function that we're moving it all into the general fund. So when you look at our cash balances, we remain in a strong, very strong cash position. Okay, let's go to page 4, debt. We'll touch on this. Adam, go to the right. Yep, there we go. So we started talking about this last year. Last year, we were able to still manage to, because we had growth in assessed valuation, manage to a target tax rate. Debt looks different now. And what we've assumed is that your debt levy, meaning property taxes, will not increase. You have 3 debt funds. You have one juvenile bond, you have a jail bond, and you have this all-purpose bond that we have included lots of things out of. I've assumed that you would collect the same levy as you did in 26. So the tax rate may look like it's going up because the assessed valuation went down. But to the taxpayers, you could say, we're not collecting any more from you in 27 than we did in 26. If that
That's
makes
what we
sense.
want to hear.
Yes. I assume that's.
Yes. You assume.
The finance committee had discussed this.
Yeah.
We've been talking about that we need to be able to explain in terms of debt levy now, not tax rate, because the tax rate is a bit noisy with all these deductions going on. So when you look at the county as a whole, the total between those 3 debt funds, we have one paying off, and I'll show you that. We have one paying off, and that's why the levy's higher in this particular fund. Is one of them's paying off, the other one remains. I've put the one that's paying off back into this number. So it looks like our levy's going up 16.7 million to 17.1, but it's really not because we're moving the one that's paying off back to this. And Landon and Oscar are aware of that. You will also note, back to Ken's point here, that I've not included that excise tax in here, which was about $1 million. And so that money is now going to your general fund. That is somewhat lessening the amount of bonds that you issue because that money now is in your general fund. And so we still froze the levy, but you could raise this levy if you want to. There is no 6% cap on this one. Okay, when you think about the 6% cap, that's the maximum levy. That's the one affecting your general fund, park, and health. This fund, there is no necessarily cap on what you can collect. You could do another big bond issue and raise this up all you wanted, but through conversations with the finance committee earlier, I've modeled in a flat levy. The next page is the cumulative courthouse fund, page 5. And under 27, pretty much the same budget has been requested. But when you look at property tax in this fund, you can see we're going from $1,124,000 to 116. That's because the assessed valuation is dropping. This is a rate-driven fund, and as the assessed valuation goes down, that rate generates less. Now, I will tell you, though, this levy goes down, the money's going into your general fund. You're not losing it. Remember me saying this is part of the maximum levy cumulative court? So we're not losing this money. Just know that same rate's not generating as much. And so, right now, you can't fund the entire budget request by about $56,000. Now, you could take some of this expense and move it to your general fund if you wanted to keep that same budget. But just note, our revenue with those the lower anticipated assessed valuation, that revenue is declining over time. So, so you do need, you would need to cut this budget some, or the DLGF will cut it when they review your budget. Okay, page 7. I won't spend a lot of time on this, but I want you to know how much is in your rainy day fund. And there's no activity. We don't have any budget requests in 27 for this. But just note at the bottom of the page, we took that $17 million out and moved it to the general fund. And in the rainy day fund at the end of 26, you have $32 million in available cash. So that would be a potential place if you were trying to find the initial funding for the bridge. You know, you could appropriate it out of rainy day, let the dust settle, whatever is reimbursed, and put that back into that fund. It would be a clean place to track it.
Mike, what is the best practices level of rainy day an entity like ours should have?
So rainy day does not have a revenue stream, and so I've always looked at the rainy day fund for really severe economic downturns. Cash is king in those situations, and/or if you're spending it now, that you spend it on one-time expenses, that you don't place any reoccurring expenses into the rainy day fund because there's no revenue to come in to replace it. So that's why I try to push everything into the general fund so you can truly see whether your budget's in or out of balance. So I never use any rainy day cash to fund that.
Mike, didn't you say previously the land that we bought last year for $17 million took the money out of rainy day into general?
Yeah, that was just an accounting function.
Could we go back and bond that if we wanted to?
I would defer to bond counsel on that.
Okay.
Bonding an existing piece of property that you have, I would defer to bond counsel.
Okay.
But for a dollar amount that we should have for our budget size, what dollar amount should we have in a rainy day?
Well, in combination of your general fund cash and rainy day, if you have more than 50% of your ensuing year property tax, which is like, let's say $44 million, your general fund, so $22 million cash balance between the combination of the two is a good cash balance, and you're well over that threshold. And obviously our rating agencies do look at that, and we do talk about our cash balances with those rating agencies when we do bond issues. So you're well beyond that. Page 12, Major Bridge. You'll see in 26 that the capital budget is $18 million. That includes the assumption of the $15 million for Hazeldale and 146th Street. That we'd use $15 million in cash in that. And then there is a debt line on this page. And you can see that I've accounted for that in 27. And our budget is still in balance. But this too, so all the bridges, all the major bridges have been, that I'm aware of right now, have been accounted for in this fund. So our cash balance was obviously sufficient enough that we could take $15 million and not bond that much of it. Now, I will tell you though, this is a rate-driven fund, 0.0333, and as that assessed valuation goes down, you can see that the revenue is going down in this fund as well. Where in the past, we were used to seeing Major Bridge grow. Until the year 2021, that is not likely to grow or maybe even decrease slightly between now and then. Page 13 is the health fund. Going back to the excise tax conversation, I've highlighted it here, that excise tax is being put in the general fund. It really doesn't matter because in this case, all we do then is raise the levy a little more to make up for it. So you're putting all the excise tax in the general fund, but you raise the levy in health. It's a net the same to the health fund. So I have put enough property tax in this fund in 27 to balance it. I will tell you, if you go down, Adam, just a little bit farther, that this fund is in a very strong cash position. I'm anticipating that we will end the year with close to $5 million in this fund. Our budget for 27 is 4.7 million, so we have a high cash balance in the health fund. You could decide technically you could lower the levy in 27. That would put the dollars back into the general fund because the general fund levy would go up corresponding to whatever you lowered that. So hypothetically, and I'm not saying you do this, but you could say, hey, lower the levy in 27 $1 million for the health fund. The health fund would be out of balance by $1 million, but the cash balance would still only drop to $4 million. And it would put $1 million back into the general fund.
I got it.
Okay. Page 15. This one's a little more complicated. There's some things going on here that we need to walk through. This is the park fund. Again, I've put enough property tax in this fund to fund the proposed budget. But much like the general fund, in the sense that our loss to the circuit breaker went down, for the first time in 26, we had a loss to the new homestead credit in this fund. And that will be in proportion to our property tax. So because our property tax would need to go up to fund this budget, the loss that comes with it on the circuit breaker and the homestead credit comes with that in some form. The excise tax is also some noise going on in that it's $589,000. That's just going back to the general fund. So you could justify raising the levy here at a minimum, $589,000 to account for that. But I also do want to point out, we have been receiving some park receipts over the years in this fund, and those are no longer coming in this fund. They are getting deposited into a park non-reverting fund. So because those dollars are not coming in here, it's causing pressure to raise that levy more, raise the property tax levy more. Now again, remember, and I'm not trying to make judgment, it's just that this fund is like general fund dollars. If you raise the levy in this fund, you're taking dollars away from the general fund, vice versa. If you decrease, it just goes back and forth.
What funds are going into non-reverting funds?
There were some park miscellaneous receipts, park receipts that they were collecting, and you could see that there was a little bit that came in 26, but not much. And I've not accounted for any of those receipts. They have been directed into the non-reverting funds.
And does that non-reverting fund show up anywhere?
Not in your fiscal plan because it doesn't rely on property tax.
Okay.
There is a budget request for that, but it is not in your fiscal plan.
Okay, so last year, the 26 budget was $4.9 million, and they're requesting 1.1 this year?
No,
That's beginning cash balance.
yeah. So I do want to touch on that because we have done some additional appropriations in this fund. And so if you'll scroll down, Adam, this fund cash balance is struggling. We've done some additional appropriations out of this fund, and I've got it highlighted here. We've appropriated almost $4.6 million in capital. But that came out of cash balance that was here. And that is a low cash balance. Property tax, if you were to fund it at that $13 million, you really need a cash balance of $6.5 million at any given year to cash flow it. Because the auditor's office has to get from January 1 to June 30th till the settlement. So you've appropriated cash out of this fund. I have not made the assumption that you're raising that levy even further to replenish this cash. You follow me on that?
What did you set the max levy at?
So this is within the maximum levy of the general fund, health, and park.
Yeah.
And so for me to fund the budget request in 27 as requested, it would take a levy of $13.4 million.
Up from 9.4 the prior year.
Yes.
Thanks.
Now, I want to asterisk that. Part of that is due to the excise tax. The excise tax being $589,000. And then part of it is that there's no longer miscellaneous revenue in this fund, and that's causing that levy to go up as well.
Mike, and I'm not sure if this is a question for you or for Landon and Oscar, but if we have these funds that are all connected, but they have low cash balances, does that get dinged by the rating, or do they look at things as a total?
I have not. They focus on the general fund and rainy day. I have not seen them focus on the park fund.
Okay.
We could explain it saying, hey, rainy day could cover park if we ran into cash. Just know it is possible. If all the budget gets spent this year in 26, if all those dollars get spent, we would begin this year with $1.1 million. That will not likely get you to June next year, and the auditor's office would have to come to you for a temporary loan. In other words, you'd have to go borrow from the rainy day fund, put it in the park fund, and then when you get your tax settlement, repay the temporary loan back to rainy day. It's temporary. So loans from rainy day would be temporary. So, or you could use general fund dollars. You could go to the general fund and borrow dollars to cash flow it till you're not supposed to run a fund in the negative through the year. And so, in this being a heavily weighted property tax fund, you don't have any dollars coming in until you get your June and December settlements. So you can, like I said, you can fund it, but we've got a pretty low, unlike the health fund where we have a high cash balance and won't ever have trouble right now funding the ensuing year property tax. This one, you're going to see an issue in 2026 or 27 likely. It's temporary. But I did highlight here, a place that you could talk about, Adam, if you'd scroll down. We've $4.6 million appropriated this year. There's a request for $4,120,000 in capital outlay in 27. So, that would be a place, if you reduce capital outlay in the park budget in 27, that would lower the levy. So if there are some things in there that you'd want to fund, that would be a conversation we could have later about bonding it in the next bond issue. If you wanted to lower this budget, there's some capital dollars that you could look at. So there's quite a bit going on. There's quite a bit going on in this fund that's causing some confusion.
And looking at this, unless we do something, we're gonna have that, based on your forecast, that property tax receipt issue every year.
That's
We're
correct.
gonna have to, okay.
So if you decided you could raise this levy some more and replenish this cash, but it would be coming directly from the general fund.
Yeah, or spend less.
That's what,
Yeah,
but
right.
we
Well-
expended.
Are they at risk of running out of cash in the second half of the year?
I'm sorry.
Is Parks at risk of running out of cash in the second half of the year before the December?
Well, they would run into just a cash flow issue again. They'd run into a cash flow issue between July 1 and December 31, at the end of December, when they get their settlement, they would have enough cash to not be negative.
So the
And
answer,
those are there's two real key dates, June 30th and December 31, because that's when all your revenue is in. And so it's the periods in between where there's going to be a cash flow issue because of how your revenue flows with property
so they
tax.
are at risk of running out of cash in the second half of next year.
Yeah,
Thanks.
from a cash flow, pure cash flow
Yeah, so then
perspective.
it gets reimbursed.
Yeah.
It's loaned, basically, yes.
We become the bank.
Yeah.
Yep.
Page 17 is the CCD fund. Now, I apologize. This is late breaking. It was yesterday afternoon when we found out from IDOT or whoever did the audit that we're getting dollars here. So you don't have to cut this fund. If you agree to the expenses in this fund, you don't have to cut this fund. This fund's a little bit different in terms of having to cash flow because it's CCD, it's capital. You don't necessarily have to have a 50% cash balance in this fund. But do note, this is another fund where we're getting a bit hurt in the sense, as that assessed valuation declines, it's a rate-driven fund, the revenue's declining in this fund. The excise tax was put into this restrictive fund before, but that's now going to your general fund, which is, again, your most flexible fund. When I'm looking at your budget strategy, I'm always trying to keep everything as flexible as possible to keep your options open and not in your restricted funds. Page 18, again, I don't normally talk about this, and maybe there's a simple explanation I'm just not aware of. I just don't know. This is that computer non-reverting fund, and there's a request for $3,550,000 here.
The replenishment, I think we've typically done it every 5 or so years.
Okay.
And so, if I'm not mistaken, that's what,
That was,
it's replenishing that fund, so.
Okay. So, again, if it's one-time expense, you're just using cash balance then for that. We're about done here. Page 22 and 23, just real quickly. 22 is the juvenile detention bond, and you can see there's nothing in 27 because it's paying off. And that property tax levy that was in here was moved to the debt fund I spoke on earlier. And the next page is the jail bond fund, and we're only putting enough property tax in to fund that, and that bond continues. But in combination, just to reemphasize, in combination of those three bonds, the first bond, the jail bond, the juvenile detention, I have assumed that you're going to keep the same debt levy between the combination of those three. Page 26 is food and beverage. You can see that the fund didn't exist before 25. There is some cash balance here. We have moved enough health insurance out of the general fund into this fund, and so we're just appropriating enough in here to use the anticipated revenue. There is some cash balance. You could think of this as general fund cash, actually, because if you ever wanted to access this cash, all you would have to do is increase your appropriation for health insurance here, decrease your appropriation in the general fund, and you would end up with the cash back in your general fund. So this doesn't have a property tax levy. It is a separate fund. But again, if we ever wanted this cash to get moved back to the general fund, we'd just appropriate more health insurance out of it and not appropriate as much out of the general fund. Page 29, then I'll stop and talk a little bit about what I anticipate coming up as conversation. Page 29 is the tax rate. And as I spoke this year, we did not increase the tax rate, 26. Next year, I anticipate the tax rate based on the assumptions I just went over with you. No debt levy increase. We collect the 6% maximum levy. I'm anticipating that rate would go up 0.0109, a little better than a penny. Percent-wise, that is 3.98% increase. You will not be alone. It is anticipated and expected that tax rates are going to go up across the state. This is not unique to you. And some will be going up more and some will be going up less. But there's a mix of what's happening. And we're seeing some rural communities actually increasing in assessed valuation, which is really unusual. So before I go into that conversation, are there any questions about the fiscal plan and your targets about what you might want to accomplish? Again, after you're done with your process of reviewing all the department budgets, the auditor's office will provide me those changes. I'll dump it back into the fiscal plan and provide you an update of how much you are in balance going into 27. Okay, that's a lot said. There's just a lot of conversation about property tax still happening across the state. You might have seen some of the headlines. The governor has had a headline saying he wants to look at the assessment system, maybe potentially change the assessment process. You know, he has publicly stated that he'd like to see property tax eliminated for those 65 and older. There's another legislator that's been having town hall meetings about eliminating property tax and replacing it with sales tax on services. I know there's going to be another property tax conversation going on in northern Indiana later in September this month. There is a lot of conversation going on because the property values, residential property values, have remained resilient and they continue to increase. And even with some of the deductions that are coming on, it's not offsetting what the increase in their property values are doing. So they're still seeing increases in their tax bills, even with all the things that have been put in place. And it's not the same everywhere across the state. It's a potpourri. As I mentioned, this year, we're seeing an unusual result in rural counties going up more than usual. And it looks like it's a lot of their residential going up. And you get in a rural community, there's not as many sales. Like a suburban, urban area, you have sales of properties, and the assessors can kind of trend those values more currently to market value. Maybe in the rural communities, they're now catching up to some of that, what was happening in 23 and 24. That's not specific, but we're seeing all these different things happening across the state, and it's still obviously causing frustration. And so in the next legislative session, I would anticipate more conversation about some form of property tax relief. I don't know what that looks like, but I would expect that. There's also a lot of conversation about local option income tax. Not so much in this county. As I mentioned, your base is strong enough that you don't have a push and pull effect on these caps that are out there. But there's still a lot of conversation in other communities happening around this, and it's not a perfect system. The system that we are under right now started in 1973, 50 years ago, and it's created a lot of inequities over that period of time. It's been tweaked and adjusted here and there, but not an overhaul like this. And so there's problems within that. And the MUST committees that are being formed in some counties, I think that will help those counties tease out some of those problems. Not so much here again, but when you look at some of the other counties, they're trying to tease out what those issues are. And so that will likely be a conversation again in the next session. So my caution flag as we go into the next session is our two largest sources of revenue are probably going to get a lot of conversation, and we don't know what that looks like. And so I would say for me personally, 2025 was probably the most challenging legislative session I experienced in my career. There were a lot of moving pieces going on, and it took a couple months after the session was closed even everybody to get their arms around what had just happened. And so we are getting our arms around that now. We do understand it better. But again, there's this frustration around property tax, and it continues to be a conversation. So that's just my caution flag in that this might look different when we get together in the spring. So that's a lot, but I did want to conclude with that because you are in a strong cash position. And I will say this too. There is probably nothing in the legislative session that is going to change that you would have to take a knee-jerk reaction to. You're fortunate in the position you are in. You might have to react to whatever those new circumstances are, but you won't have to do it overnight because of your position. So I'll end on a positive note. How's that? I'd be happy to answer any questions that you might have.
Anybody have questions? Mike, I have 2 questions for you. Any movement by cities and towns as it relates to income tax would not affect us at the county level in the short term?
No.
Is that correct?
Correct.
And my second question is, the young man that you brought with you?
Yeah.
What's his name?
Sam Vanderveen.
Sam, did you understand everything Mike said? You have a bright future. That's all I got.
Sam's a smart guy. He's been immersed in all this.
If he was following along, I've been doing this 30 years.
Yeah.
If he followed along with that and understood what you
Yeah.
just told us, he's a pretty smart fella.
Mike Carter and I were reminiscing. My first experience in Hamilton County was 1989, and I was a field rep for the state tax board, and I was in the old courthouse. Dolly Pierce was the auditor, and Robin worked in the back room. There was a little small back room there, smoke-filled, and it was still smoke-filled, and poor Robin was not a smoker, and that goes way back to 1989. Fred Swift and I shared a space together in the courthouse. So,
Thank you, Mike.
Thank you so much.
my pleasure, and I'm just a phone call away if you have questions.
Okay, we'll digest what Mike just spent an hour going through here. We'll get started. Everybody ready?
Ready.
We're going to start with the assessor.
Good morning.
Good morning.
Good morning.
Thanks, Mike, for the intro lead-in for assessments talk. I won't talk about assessments as much as well, just the budget stuff here, obviously, for starters. But just as far as what's going on in our office, I mean, I know back in the spring, I came to you guys for approval on new software and transitioning from our assessment software to a new vendor. And we did that, went live as of May 1st, and we've had a few hiccups here and there, not as smooth as I had hoped, but we're still working through some things. Between that and the flooding, it's been a busy summer. So in terms of budgets, this past year's been interesting. I've worked with the auditor's office a little bit in preparation for that switch to on the vendor. You know, some things maybe I didn't understand in the past, I've come to understand in terms of, you know, how the reassessment and sales disclosure funds work. Dollars tend to continue to accumulate there that maybe I wasn't fully aware of. So what I've done this year with my budget is I've moved a lot out of general fund. If you look, if you were to compare this year to last year, I've moved approximately $48,000 out of my general fund part of the budget, mostly training, expenses for our conferences and things like that. Continuing education has been moved to sales disclosure because we are allowed to pay those types of expenses out of there. So in terms of reassessment, the reassessment, what I'm asking for is up a little bit this year. Part of that transition in the software included our annual maintenance costs, and typically that had been paid by ISS in the past as part of their budget. Worked with Chris Mertens, and we are assuming that cost now in the reassessment fund. In addition to that, because there is ample funds in the reassessment fund, worked with the auditor's office to again talk about, you know, what can we do to help, you know, maybe spend some of it down or help the general fund. So I'm hoping to move 3 positions out of payroll positions from general to our reassessment fund, so. That's kind of a summary of things.
Kevin, are you asking for new people?
I am not asking for any new people, no.
Good man. Anybody got any questions for the assessor?
Kevin, could you comment, please, on the professional services, the requested budget for $333,000? What's that going for, please? That's why I asked.
I think it's litigation, with legal services, appraisals.
Yeah, it is summarized in the breakdown there, so, the budget, 30,000 for appraisals, 60,000 for legal services, legal services being, we do use, legal services from a separate, vendor entity to, for property tax appeals and that sort of thing. I have worked with our legal department a little bit and talked about, how they might be able to help in that maybe going in the future. I do have a potential litigation expense that's always kind of been thrown in there as part of the budget for $240,000. That kind of stemmed from years back when the big box stores were filing a lot of big appeals and it was costing, $500,000 for some counties to try to fight. So I continue to budget. I have tweaked that down over the last couple of years. And then, like I said, so that pretty much assumes that. Like I said, we go down to repairs and maintenance. Like I said, that was added down. The Exoff maintenance contract was added. And the 3,500 line there, but
Yeah, I didn't know what that was. $135,000, that's your software?
our software maintenance, yes.
Okay, thank you.
Anybody else? Thank you.
Thank you.
Anything you want to tell us?
I don't know if I have anything else I need to tell you. Like I said, if there's any other questions about reassessment or what Mike was saying, I mean, obviously,
And you have a program to help people that were affected by the flood.
we do. They can file what we call a Form 137R. We have provided copies of that out at the fairgrounds as part of that. It's got our phone numbers, put stuff, I think, out there on social media with our phone number, letting people know. It was in the article ran in the Reporter talking about that. So if people have significant damage and want to come to us, we can do some adjustments. It won't take effect until it is retro back to 1/1/26, which is the 2027 tax bill. So it doesn't really affect anything this year, but can affect things next year. And again, it's kind of case by case, depending on how much damage you have. Certainly if you're being displaced or if you have significant damage, we'll look at it and we'll do a percentage off or figure out, come to some conclusion there. So we've gotten, I think, maybe 30 some to this point. I anticipate more. They basically have till the end of next year to feasibly come in. So as people get their insurance quotes or whatever it is that says, can help justify what's the dollar amount that we're looking at, then that we can maybe look to adjust to, so.
Good. Thanks, Kevin.
Thank you.
Anything else?
Nope.
Thank you.
That's it. Aviation.
Morning, everyone.
Morning, Sam.
Morning.
All right. Got two budgets to go over, one for the executive airport, one for the Sheridan Airport. I'll go ahead and jump right into the executive airport. Our core budget, our 2,000, 3,000, 4,000 series line items are pretty similar year over year from last year to this year. Slight increases in our operating supplies, professional services, and mainly our insurance budget. The insurance premium that we pay out of the executive budget does cover the Sheridan budget as well. So we did increase that to hopefully compensate for any increases there that we may see. For the Sheridan Airport, we did ask for a decent increase over what we had last year. If you remember, last year was definitely a test run for this new airport underneath our oversight. And so we weren't quite sure what we needed, what we were looking for. And so we requested a budget that got shifted a little bit from what the request was. So for this year, we looked at our budget that we requested and decided to increase it in two core areas that we really need to see an increase in. So specifically professional services and outsourced maintenance, so the 3001 and 3500 lines are a little bit short at Sheridan, not allowing us to really upkeep the airport as we would like. And so for this year, we're asking for increases in those lines to help us not only maintain, but hopefully improve that airport going forward.
Are you asking for new people this year?
We are not asking for any additional folks at this point.
Anybody have any questions? Thanks, Sam.
Thank you.
Auditor, oh, here we go. Here's where the budget cuts come right here.
Good morning.
Morning.
Full transparency, I didn't understand everything Mike had said, but he's only a phone call
That young
away.
guy did. so
He did.
keep-
He's
keep
younger
his-
than me, so
Keep his name and number.
So I can keep this pretty short, because honestly, there's not a whole lot of excitement in the auditor's budget this year. We followed budget instructions since, we put them together, we probably should. We're not asking for any new positions. The increases you're gonna see are really, comes down to two things. Salary increases in our budget are from the pay bands, pay scale that the council approved. And then second, the basic increase in cost of doing business, supplies, training, travel, contracts. We'll continue to look for ways, to do things better, more efficiently. We've taken advantage of the technology, and when I say we, I mean Adam, because he's boy wonder when it comes to that stuff, so. And we'll automate as many of the processes as we can and look for improvements, so. Again, nothing really exciting in our budget, and I'll be happy to answer questions that you have.
You said you were not asking for new people.
We are not asking for any new people.
Anybody have questions for the auditor? We appreciate all you and your people's work for us. Thank you.
Thank you.
I do have a question. Sorry, after this, I have in my notes, and you might know this answer, the answer to this question. On the last page, you have for the intellectual developmental disability professional services, you have a reduction of 58,000. I'm just curious what.
It's state mandated, so,
So the state reduced that? Okay.
yes.
Interesting. Okay, thank you.
Clerk?
Good morning, all.
Good morning.
Okay. The clerk's budget is a lot, theme should be transition, going from my term ending to a new clerk coming on board. In addition to that, we have 5 employees retiring, so we've got a lot of changes coming up. Then in addition to that, we have the 2 new courts coming on board, so that brought us to new staff for that. So Brad, to answer your question, there is 4 new employees in here, 2 to cover each court.
How many? 4?
4, and they're
In your office?
in the clerk's office, yes. And that, they're all coming in as 52,000, they're at the bottom of the ride right now, so, but anyway, so that takes care of them. Jason and I talked, I think one of you asked about if we went to vote centers, what that could do for us. There is probably $100,000 less in poll workers that we'll have, and $8,000 less in, $16,000 less in rent. We'll still have a little bit of rent we need, because we rent trucks to move the voting machines and stuff, so you can't take that whole line, but you
We
can
are
put-
still moving towards that, right? The vote center?
Yes, hopefully in this very room on September 29th, it will happen.
Okay, great. Anybody got questions for the clerk? I did, at our meeting a month ago, Kathy, somebody come representing the schools, because 3 or 4 of them went in a referendum. I was glad to see that they finally opened the doors to let us
Yes.
use school buildings, which I have always thought was counterintuitive, that they want the voters to come and vote for the referendum, but you can't use the school to have
Yes.
the vote.
That,
So I was glad to see they kind of,
that has been an
Change of heart.
ongoing issue for several years, and the commissioners kind of said, okay, we're gonna have a meeting, let's talk, and 4 of them jumped on board right away. 2
Yeah.
we kind of had to bring along, but,
good, thank you.
yep, okay.
Anything you want to tell us on your,
No, I've just, thank,
you'll
this
be
will
missing coming to budget hearings, is that what you're telling me?
Yeah, I was just getting ready to
That's what
say
you
that
can say.
this would be my 16th budget hearing as a elected official, so anyway, I'll just see you out on the street somewhere, not here.
Thank you. Commissioners.
Good morning, Council. I want to start off first by thanking each and every one of you for the past 2 weeks and your support in the flood efforts. We just couldn't get through it. We're still in the middle of it, and I want to thank you. So, with that said, I'll get right into it. You have the budget before you that I presented in the packet. We're asking for one additional person. It's a VSO officer. And the reason, I believe the statistics that I included in the document justify that. We are backed up in the VSO office. We're on an appointment-only basis with exceptions of, an exigent circumstance. So we believe this VSO officer is necessary to keep up with our veterans in the county and that heavy caseload. And that's really our only request for manpower. I do want to just note, and I'm working with Kelly. Kelly's been great to work with. There were a couple issues I want to make sure that we included. One was, I believe we found Miss Ellis, Christine Ellis, an employee. I just want to make sure she was included in our personnel for a Comet DPL3. That was omitted, I think, on the sheet. So we employ her. I just want to make sure she's included for funding. And the other issues were that we addressed were $89,382 for the health clinic expenses. Working with the auditor's office, I just wanted to make sure that was included. That was a number provided by the auditor's office. The Cherish contract for non-for-profits. Cherish actually provides a service to the county that we executed, the commissioners executed with Cherish. They provide the forensic interviewing for the victims of sex crimes against children and elderly. And that contract, when we discussed, I believe Mr. Alexander and Ms. Mackey were in the meeting. Wherever the council decides to, if you decide to fund it, there was discussion putting it in the prosecutors. There's no objection wherever that lies. I just wanted to let you all know that. And then there was a $400,000 that we had to include this year, which was a contract that was executed several years ago for broadband services. So that was included. But with that said, any questions I can ask or answer?
So all those things you mentioned weren't labeled out, but they're in the financials?
They were, when it came to the health clinic expense, the $89,382, working with the auditor's office, we were told to mention that make sure that was included.
Okay, so
that's
we
a
have
number
to
that
add
was
that.
provided. That, for some reason, it lies in our budget, but the number is provided, through the auditor's office on that. And that was for the health clinic expenses that we provide.
Any questions for Mike?
Mike, you said that's 89.
Yeah, I was just, if there's a few of these contracts that are kind of, I think would be better served in the department they reside in, like moving it to, not in the commissioner's budget, but putting it actually in the department that it needs to be. I don't think it's been in our budget as submitted, but as we go to move things around, it just makes sense to put things like the health department in the health department type thing.
Anybody else?
I agree.
I just wanted to say that during COVID, I was really happy that we had the 4-H building and the 4-H grounds. We put it to use for clinics, and then again with our flood situation, I was glad to see that we had a facility and an open lot to go out there and deal with the refuse and whatnot, to have that, and I think we put that to good use.
Yes, sir, and I would agree with you. Susan's in the back. Fairgrounds folks have been great. And I got to be honest with you, if we didn't have that asset, sir, it would have been even a bigger headache than what we all face right now.
Yeah. All right. Thanks, Mike.
Thank you.
Community corrections.
Good morning.
Good morning, Kevin.
Good morning.
Our community corrections budget, any increases you'll see are mainly in the personnel sections. We took a really close look at our 2,000 and 3,000 lines to see what we could cut as much as possible. And we saw some significant reductions in that for 2027. We do have an increase in our 4,000. We have some aging fleet vehicles. And so we have 2 of them that were purchased or that were acquired using the county's enterprise lease agreement. And those 2 leases are going to be coming up in 27. We also have 2 vehicles that had been removed from our fleet entirely. They were inoperable, unable to be repaired. So over the past 3 years, including next year, we'll have 4 vehicles that are going to be removed out of our fleet.
Can you describe what kind of vehicles are they? Trucks, sedans, what are they?
They're base level. We have 2 of them that are Dodge Durango base level. And then
Are they marked?
I'm sorry?
Are they marked?
No,
Is that on purpose?
it's not intentional, but we just never done it.
Think about it, okay?
Sure. We did receive notice from the Department of Correction after our budget was submitted. We were anticipating a grant reduction from the Department of Correction. We just didn't know by how much. So we received that notification. They reduced our grant by 10%. So we saw a reduction of $254,125. So we will need to see an increase in our 6,100 line, but in that same amount, so that we can reimburse the grant line, because our grant is 100% personnel expenses. The silver lining we're hoping is that that reduction may be offset. So I know currently at the State House they're looking at some ways, because this isn't just a Hamilton County issue. This is statewide. There are several community corrections agencies based off of the most recent grant awards from the Department of Correction that are going to be closing operations altogether. Given that, when you look at how much it costs to supervise an individual in the community versus the Department of Correction, it's a significant difference. We're one of the higher per diem when it costs to supervise a participant. We're looking at about $64 a day versus $85 a day in the Department of Correction. So if you just do that math across the state, how many people are not going to be able to be served in community supervision, and they'll have to be in jails or the Department of Correction? Folks that led at the State House are saying this is you're just moving one cost and you're going to add more to a different line. So there's some talks right now about how this might actually be absorbed in a out of session. So that's just very early. It's being discussed, and we're very hopeful. Things are looking good, and we're also hopeful, and we're being reassured that the Justice Reinvestment Grant funding that was started in 2018, which has seen some reductions in the appropriations over the past couple of years, will be reinstated, if not increased, by the legislature moving forward to the next session. So hopefully these things that we've been seeing, these offset, we didn't get the grant funding increase we asked for last year. We're seeing a reduction. We're hoping moving forward that we'll actually see that restored and then also increase as well. We're not asking for additional personnel in this budget either.
Okay,
But that increase won't be in for 27. You'll see it in the future.
That's to be determined.
Okay.
There is a possibility. So we're holding out hope, but we're not. We're going to be operating right now as if it's not. But we're hopeful that there might be some relief.
Kevin, are you asking for new people?
No, we're not.
How many cars are you getting? 4?
Yes.
I ask any questions for Kevin. Thank you.
Thank you.
Coroner.
Good morning.
Good evening. Morning.
The 2027 coroner's budget specifically addresses an unprecedented increase in caseload. We're experiencing about an 87% increase in caseload. To give you an example of that, just yesterday, we worked the number of cases that we worked total for 2025. So the budget just specifically requests enough manpower to be able to staff the office 24/7. Right now, we're working on call. My deputies are working at a minimum 6 days a week. Some weeks they're working 7 days a week. Because we don't have 24/7 shift coverage, they're being called out in the middle of the night at a rate that's just very taxing for them. One deputy this past Sunday was called out 11 times in one day. So, that's creating some family issues. It's creating some retention within our employees. So we're asking for 3 people to address that concern.
How many?
3.
3?
We need a minimum of 3.
3 full-time.
3 full-time to staff a 3rd shift.
Okay.
Will you have difficulty finding those individuals? A coroner in third shift would be tough, I would think.
You know, we've been really fortunate over the last couple of years with our hiring. We've been able to pick up retired police officers, paramedics, firefighters that, you know, have really kind of that first responder skill set. We're seeing resumes now that are coming in from all over the United States that are experienced deputy coroners. But again, those folks are experienced and are at a position in their life where being a deputy coroner on the midnight shift may not be real attractive.
So how far away are you from moving into your new gigs out on?
If I understand the conversations correctly that I've had with Steve Wood, we're looking at maybe June next year.
Okay, so when that opens, you'll have spots for 3 new people?
Yeah, until then, we're going to be elbow to elbow, and it's going to be shared working spaces and maybe people sitting in hallways.
Okay, how about vehicles? You want any new vehicles?
We're good on vehicles. I think, you know, the vehicles, the fleet additions that we've added in the last couple of years, we're good for now. We may be
Okay.
looking at that for the 28 budget, adding some new vehicles.
Okay.
How many runs have you got year-to-date so far, Jeff?
Just shy of 800. I think when I last left the office, we were at about 796.
Where'd you finish last year at?
We finished last year, I believe, right around 792.
Were you able to get a solution for the forensic pathology for your autopsies?
We're doing less autopsies because of technology that we've purchased that have kind of allow us to know what we're getting into before we go to the autopsy step. Some toxicology equipment we purchased for the office is giving us some answers where we can kind of get away from just walking blindly into an autopsy. The forensic pathologist issue is an issue that coroner's offices nationwide are experiencing. And I've spoke before, there's, 600 board-certified forensic pathologists in this country serving just a little bit less than 3,000 death investigation agencies. So they're there. They would love to come to work for us, but these guys are traveling forensic pathologists, and they work their own schedule. And I don't think that the conversations I've had is they don't want to be bound as a county employee and working a full-time
I'm
schedule.
hearing it's less of a problem this time than it was 2 years ago.
It's less of a problem because of technology and the experience of my deputies also with their investigative skills going into cases.
Thank you.
Just a general question, does all your refrigerated equipment that's at Riverview, does that move to the new facility, or do you get new?
No, we would maintain our morgue space, at the present plan is to maintain the morgue space at Riverview Hospital. We're getting short-spaced in there. But we've made some changes in how we manage our morgue. A year ago, that was more of a concern to me, but with some of the changes we made with staff members specifically supervising and taking on the morgue as a specific task, they're better able to manage that facility. I think as we look down the road, everything being under one roof certainly is the most efficient way to do that. But I don't think we need to do that at this present time.
Anybody else for the coroner? Thank you.
Have a good day.
Uh-oh. Council, Kelly Morehouse. Come on, you need to walk up here. Okay, Kelly, what's new on the council budget?
Not a whole lot. We reduced our office supplies by $200, and we reduced some professional services to kind of offset some other expenses for training. But generally, we're about the same as last year, maybe a little bit less.
Are we asking for new people?
No new people,
How about vehicles?
no vehicles.
The numbers that were presented did not include the discussion around your job description update, or did they include that?
They have not.
Okay, so that's something we need to talk about. I know we talked about it previously, but.
Anything you want to say?
I do not.
Thank you.
And thank you for all of your extra work going through this and bringing things to our attention throughout the budget process. We appreciate it.
I just want to say
really do.
publicly how beneficial it's been having you on board and supporting not only the departments, but the councils from a communication standpoint, coordination, so it's been great.
Thank you.
Great. Thank you.
It's been a big help to me this year as president to be able to get hold of Kelly and get whatever.
It's a lot different than it used to be.
Yeah,
Definitely.
absolutely. Okay, Judicial Services Pretrial Service Program, YAP.
Good morning.
Good morning.
Good morning.
First of all, we wanted to thank you for your support of the courts. We're looking forward to the opening of Superior 8 and Superior 9, and that wouldn't have been possible without your help and your assistance, and obviously the help and assistance of our commissioners. Just to give you an overview of where the courts stand right now, we currently have 15 full-time judicial officers, and as of the end of last month, according to the statistics that we keep based on the Indiana Supreme Court data that they provide to us, we have enough work for 18.4 full-time judicial officers. As of January 1st, we'll have 17 full-time judicial officers, and so there is still going to be a little bit of a deficit, but not quite as extreme as what we're facing right now. We are looking at, we're on track for by the end of this year to have over 30,000 cases filed in our county this year. That's about an 8.4% increase over last year. And just to give you a picture of where we thought we'd be versus where we are, in our request to the legislature in 2024 to obtain the new judicial officers, we conservatively estimated an increase of 6.58% in new cases filed, and we're looking at probably 8.4 by the end of the year. More important than all that, I think, is what's happening in those cases. For instance, just in the first half of this year, we provided an interpreter in roughly 1,000 hearings. Through the end of June, we've had 8 jury trials that require interpreters. Jury trials that have interpreters require 2. Whereas it used to be, when I started 6 years ago, we used to have 1 or 2 jury trials a year that required an interpreter. In the last 18 months, we've had interpreter requests for 41 different unique languages. So we're seeing a lot of increase there in our need for interpreters. We're also seeing a sharp increase in the need for competency and psychological evaluations, especially in our major felony court cases, and the need to provide counsel for parents in adoption and divorce and paternity cases where their parental rights are either at risk or severely being at risk of being terminated or at risk of being severely curtailed. So that's just an overview of where we are and where we're going. We have asked for the 2 new courts, we are looking at staffing those with 8 new people. We had, in working with Jason and Adam, we found in our budget, we had a position that was inadvertently left in there. And so one of those positions for the new court will be filled with that slot, so to speak. But otherwise, we're asking for 7 new people for the new
Wait a
courts.
minute. What's the number, 7 or 8?
Well, it's.
You found one, so you need 7.
Correct, absolutely. Okay. Yes. And then I'm willing to answer any questions anyone has, or.
Things are going to get close proximity, aren't they?
Yes, absolutely.
All right. Anybody have a question? The Judicial Services.
Do you think, just out of curiosity, not that it's probably a big cost, do you think you guys will move someday to like an AI for interpreters, or is that?
Well, that's a good question. I know the Indiana Supreme Court is looking at that. The last I heard, I'm actually on a committee, an Indiana Supreme Court committee on language access. And at our last meeting that was discussed, I think the consensus is it's not quite there yet. We have to follow the Indiana Supreme Court guidelines on interpreters, and they require, for instance, an interpreter to be court certified to serve in our courts. And so that can create a difficulty, and it's also causing the rates to increase because the certified interpreters know that the Indiana Supreme Court requires that. So we're not quite there yet. Obviously, if the Supreme Court approves that, goes that direction, we'd be willing to work with them on that.
All right. Anybody else? Thank you, Jill.
Okay, thank you.
Pre-trial services? Nothing?
Mr. Miller is not requesting any increases for next year outside of the salary projection worksheets.
We'll take it.
Okay.
Thank you.
Okay, thank you.
YAP.
And yes, Tricia Akers is here, if you wanted to speak with her.
Good morning.
Good morning. Youth Assistance is not asking for any increase in personnel. We're in good shape and we appreciate your support as always.
Thank you.
Thank you.
Anybody got questions for what? Okay, good. Run.
Saving them for.
Maintenance. Here's somebody.
Gets a lot of questions here.
Morning, Steve.
Morning, everybody.
Good morning.
Thank you for letting me come up and speak honestly. It's been a challenging year for everybody, I'm sure. I do have some increases in 1,000 and 1138, but those are due to the new buildings that are coming online. Aspire Building, Gabi Building, Coroners and Training Facility. I have increases in utilities, contracts, in a 1,000 series, and supplies. In 1138, I have increases in materials and products and outsourced repairs. Total of 560,000, 574,000 total for everything. That does not include what I put in the budget for out at the new 911 site. The new 911 site, the funds don't come out of my budget, but I did put it in for 7 employees out there.
7?
7 employees. I have, well, it's 24 hour, we're running 24 hours out there.
Well, we'll take that up with guys on down the list here.
Okay, perfect. What questions would you have for me? I mean, I think I can answer pretty much anything that you might have.
Are you asking for new employees for your?
No, I'm not.
Okay.
I just have a question for Baker's Corners, the ARPA money that's sitting there.
Yes.
I'm surprised it hasn't been spent yet.
We're spending it down right now.
Okay.
So there's guidelines for the ARPA funds, and so we're making sure we follow those guidelines. We should be done with it by the end of the year with all the ARPA funds.
Okay, just wondered.
That's a good question. I wasn't expecting that one, but yes.
Can you just talk a little bit about what you're seeing with the utility cost increase?
So utility cost increase over the past 5 years, we've seen anywhere from 12 to 18%, especially in Duke, 6% in water. Natural gas, actually, we have not. So we buy our natural gas online through a group. So we've seen a reduction in natural gas cost. I don't know how long that's going to last. But our utilities are, with the new buildings coming online, I took the square footage and did a rough estimate of cost, what it should be. So I hope I'm pretty close. I think I will be.
On the professional services side, that's a lot tied to this more area.
Yeah, correct. So our contracts keep going up, but for all the new contracts for HVAC, mowing, some snow removal that I have to do because I don't have the full staff to do all the areas, insect control, that's what those new increases are.
With the added, as we look into 28 and 29, when this new building comes online and we have all these other, the training center and all, I mean, looking at RFPing some of these services, maybe trying to look at how we can get maybe some value in having, a pretty large contract.
Correct. You can't. And so that's what we've actually been working on that. So When these contracts come up, I think it's 2 years left on these contracts, we're gonna go out and request a 3 and 5 year contract for everything under one. We have certain spots, we keep certain contracts. Jail complex is a prime example, right? Some of the contracts I have, I can't use those contracts over there because it's a little bit different, right, with prisoners. So there's
They're
certain
a
things.
lot more expensive to go over there than they are.
Exactly right. So HVAC is a prime example. We've gotten down to 2 contractors. And the reason for that is some contractors have a great price during certain things. Mr. Beaver will know this. And you have contractors that work on bigger equipment. It does not financially work for us to have the same company that does all the big equipment, do the small equipment because they want to charge that same rate.
Steve, does anybody have any more questions for
Yeah,
Steve and me?
Sounds like Mr. Reuter said we're gonna need to cut some money out of Cume Capital.
So I have.
Where's your sacrificial lamb?
Yeah, so here's what I was getting ready to hit that too. So what my understanding from Mr. Reuter, what I just heard for a Cume Cap courthouse fund, right? I just wrote this down and went through the numbers. I cut out 80,776. It takes that line to 1 million. We did take a big cut on that last year, but it was special projects.
I'm sorry, Steve, which line?
So that'll be the come out of the 3,500 on the 1140 Cume Cap courthouse fund.
And how much can we take out of that?
80,776. I think he said 50. I just took it down to $1 million, and it's easier to work that way all the way around.
Thank you.
And then there's a Cume Cap development fund. I'm not sure where we're at on that. I'm working on some items to reduce out of that as well if needed. Mrs. Morehouse has been very helpful with me on some of these things. It's been great this year because you guys had a rough time last year, and so I've kept contact and we've been working on that.
On the project side, I mean, the one line item that's like 5 million was 7, I think, last year. That's all due to the expansion of the courthouse, right?
Correct.
So we'll see that drop off.
You will.
Okay.
Anybody else? Steve, I have a question, just going forward on, not on your budget. The county is not planning on doing maintenance on the training center, are we?
As of right now, I'm thinking I'm gonna have to, right? But my understanding is it depends on when you guys get funds coming in for that. We'll probably still do the maintenance, but it'll be funded through whatever you guys funds you have come in.
My general understanding when we paid for the whole thing was we'd buy it, the participants would take care of the ongoing maintenance.
We'll fund the ongoing maintenance.
Yeah.
So my opinion, correct me if I'm wrong, okay? I'd rather us do the maintenance on it.
Oh, I don't care.
Yeah.
I don't care who does it.
Yeah.
I still want to pay for it.
I agree 100%.
I will pay for the sheriff's part.
Yeah, right. No, exactly.
Right.
So, yeah, just for me, I want to make sure we maintain it correctly like we do the other buildings.
I'm with you on that. Thank you very much.
Anything else? Please don't hesitate to call if you need anything. What tours, let me know, please. Thank you.
We always do.
Thank you.
ISS. Morning, Chris.
Good morning. I know at least a couple of you watched my little video I sent out. I hope that was somewhat helpful. It did improve since last year, so we'll try it again next year and maybe it'll even be better. Wanted to touch on the non-reverting fund since it was discussed early this morning. That has been in place since prior to my arrival, and in my time here, which is going to be 17 years in November, that's been funded 2 times by council, and it's never been done during budget hearings. So it's always been done at just through the normal council meetings. Normally, I think the most it was been funded since I've been here is around 2 million. Last time I think was 1.5. And we've typically, it's about every 5 or 6 years that that's been funded. This request is larger because of the, one of the projects we'd like to do is to modernize the existing courtrooms in this building so that when the new building, the new expansion opens up, all of the courtrooms are modernized to the same level. If you want to pull that part out and want me to come back to you when I have that project number, I can do that. That would leave that fund request at about 1.5 million. So in line with what it's been.
I understand.
I don't think-
Are you asking for new people, Chris?
I am. There's two people requested in there. One was requested last year as an enterprise architect. And so as we continue to grow, as we continue to bring more buildings online, really having oversight of how we implement IT and ensuring that it's standard across the county and across all the infrastructure is really important. And I think long-term that will make things easier for us as we move forward, ensuring there's continuity in what we're doing. The other one was a GIS specialist. So in ISS, we have the GIS director and a GIS developer right now. We maintain the server and the base map and the imagery that all the other departments use. That team has been a team of two since I've arrived here. So we have not grown that team. And so we'd like to add an additional person to that. We have seen our money that goes out to outside vendors to help. Some of the load has continued to increase, but it's also continued to put a load on those two staff members to get things done, to handle requests that come in. So that's that position.
Real quick, for the modernizing the courtrooms, is this service like systems, or is this capital and systems?
It's a combination of services to integrate the audio video, and then there's obviously equipment that capital cost that would go into that.
Okay.
Just to give you an idea, Superior 8 and 9, I just sent those quotes over to Buildings and Grounds in Skinder. The audio video cost, which is a combination of services and some equipment, was about $145. And then the equipment cost, the Cisco networking gear and cameras, was around $38,000. So $180 for Superior 8 and 9 courtroom.
I have no issue with that cost. Should that be in the project?
It is in the project.
Oh,
Superior
okay.
8 and 9 is a part of the project. I sent it over to Buildings and Grounds as part of that project.
Okay, thank you.
And then on the enterprise architect, that was the same position that you had asked for last year.
Correct.
And that was not one that we selected to fund, so it
Yeah.
continues to be a need is what I'm really getting.
Overall, the 2,000, 3,000, 4,000 series of the budget is essentially unchanged from last year. And the reason that remained unchanged is because I cut significantly the hardware budget, because we did a number of hardware purchases this year, early this year, late last year, to avoid the price increases. So from a servers and storage perspective, which have gone up astronomically, we shouldn't need to purchase that kind of equipment for the next 5 to 7 years. Now, there's still the non-reverting fund request. There's a rubric replacement that's going to come up in '28, potential phone system in '28. Those are longer-term capital expenditures, but from the day-to-day servers and storage and networking, the county is pretty set for the foreseeable future.
Any other questions for Chris? Thank you.
There was a couple of items I was told to mention.
What, you want cars?
Yeah, I want cars. No, I don't want a car. Well, I would like a car, but no, I don't need a car. There was a couple items that were added to the budget after the budget submission happened. One of those was recently with the clerk's office and the AI phone system chatbot that we added. That item didn't get included in our budget request. So that was polymorphic, it was $60,800. And then the Aspire building, which was brought online, the Comcast network for that, the internet connectivity is going to run around $12,000 a year, and that was not included in our budget request either. So I just
Run
wanted
that through Mr. Wood, will you?
Yeah.
We already gave him a bunch of money to take care of those buildings.
Okay, I'll tell him that.
All right. Thank you.
Thanks.
Emergency operations.
Good morning, council.
Morning.
Sorry if we're a little frazzled today. It's been a week. I'll start out with and try to remove the emotion from this, but our faith works in funny ways, and we couldn't have done anything to demonstrate the efficiency and the effectiveness of creating this division more than the last 3 weeks, this natural disaster. The efficiencies and effectiveness of those three departments becoming one department with three divisions functioning together really tied together what emergency operations is supposed to do. And having the resources there to have professional call takers for the victims and survivors of the flooding instead of volunteers, having our special projects manager able to be there and help ramp up the debris management, having an entire finance team from all three divisions in one department that's able to start with all the FEMA reimbursement rather than one person in EMA having to accomplish that. And having that public information person able to share information across the board to all of those impacted by the floods. None of these things would have happened if each of those departments would have existed in silos prior to this. And the blessing we had by that being organized before this flood just made it work so much better for every person impacted by the flooding within Hamilton County. With that, this is our first budget of really putting together all three divisions into one department, and putting all of those funds into the proper columns and the proper funding line items. I've got Brian Bethel, our CFO, here to explain line by line each of those increases or decreases that balanced out within the creating the one overall budget. And we're certainly here to answer any questions. I've got the entire team here to answer them on their specifics. There are probably questions concerning the training grounds because this is the first year of it. The combining of EMA and 911 into that one operation. I've got the leaders from 911 and EMA to talk about the efficiencies and what they've been able to cut and bring together by that one division, as well as our special projects and where that is today and where it goes as the center opens, as the training grounds opens, and as the new towers are built. So I've got that team here to answer any questions as well, and I'm here to answer any of them that you have on the overall totality of the division. With that, I'll hand it to Brian Bethel.
Are you guys asking for new people?
I'll answer that in a caveat. I did not in the budget. I had absolutely no intention to do it. One need that has arisen through this is that we need a public information officer for about the next 6 months for the sharing of the information on this FEMA process that's going on. Right now, I have a communications supervisor that, again, that's one of those efficiencies that we wouldn't have had available if we were separate departments. Okay. But I've brought him in for that to roll it because we're having to share so much information on the FEMA and IDHS processes and the registration centers and all that.
Okay.
So it's not in our budget, but I don't see that need stopping for at least the next 6 months if continue until all of this is worked out. And I think we can see and justify the need for that. So no and yes.
Okay.
So is it a contract employee you're going to look to fill, or are you just going?
No. Right now, we're filling that position with one of our communications supervisors off of a shift. And obviously, that need is still there for that supervisor on the 911 shift. But this person had the public information training prior to it and fit right in and started on day one and has been working through it. So we're using him in that capacity. But at some point, we'll have to balance out that position and his full-time position and fill it. And I'm not certain how to do that just yet, but we're working through that.
Good morning, everyone.
Good morning. Good morning.
Real quick, for some very initial questions, we are asking for five vehicles. And if you have further questions about that, we can have Ryan come up and address that. But we did lay out a 5-year plan for our fleet and vehicle replacement system. Like I said, Ryan can talk more about that if you've got questions on that. But we actually sat down and planned that out. So instead of just asking for what we need this year, we looked out 5 years and looked at a fleet replacement plan. Regarding our major projects, as if we didn't need other things going on top of nature, we've got the new 911 center, which is slated to be opened first/second quarter of next year. All of the associated costs that come with that are looking at being fully funded by the PSAP lit. So we've built all of those increased costs, any of the utilities, any of the maintenance that needs to go into that building. A lot of those numbers we got from Mr. Wood based on the square footage of the building and those estimated costs. So a lot of that dollar value that was created was used based on those formulas. We're also looking at the best way we can get into that building, reduce the cost as much as we can. We've kind of been going back and forth on that, and that's the request that's in there for the Presley Drive building. The training center is a little bit different. Because of the focus and the purpose of the training center, we are unable to utilize PSAP lit funds to support that building. So working around with it, I know there's been conversation already about having the municipalities kicking in some money to help support that. And we're looking at that as definitely an investment going forward. But to get this off the ground, we are going to have some kind of money in the budget to be able to turn the lights on and get everything going. We expect that facility to be up and running roughly around the same time, first quarter, second quarter of next year. We still don't know an exact end date on that, but those values that we plugged into the budget, we got some, again, statistics from Mr. Wood about what the average cost of maintaining those buildings was going to be. We then sat down and figured out what that would cost for the entire year. Well, looking at really only needing it for about half the year, 3/4 of the year, we then reduced all those numbers by appropriate amounts. So the number that we've got in the budget, and I've got more detail in case you're curious on it, but a lot of it came from Mr. Wood as far as those actual expenses to keep the building going. We reduced it. Instead of asking for the full year's worth of money, we know we're only going to be in there, second quarter beyond. So we're looking at that. Any of the funding that gets determined from the municipalities becomes a bonus. And one of the things that we did regarding that building was we left the capital improvements at zero for that. And the whole concept was that any money that we got from those municipalities would be used for the capital improvements. Obviously, it can be moved around as needed, but that was kind of how we laid things out. So we had money for utilities, we had money for everything else to get the buildings running. And then any additional funds that come in help us out that way. Those are the two main big projects. We've got some other internal projects going on. The radio system continues to be expanded upon. We did a replacement of all the radios over the last couple of years. That's still ongoing as we're looking at expanding that into other areas that are not just public safety. There's a core upgrade going on with the back-end systems that actually make the radios work. I think everybody knows where the new tower in Atlanta that's going up, right? That's still in process. That's still being worked out and figured out, but there's a contract to replace a lot of that stuff. We're in the process of building out our own internal core so we can operate in Hamilton County independent of any other county in the radio system that we're currently dependent on. So that's all part of this project that's going on. Another thing that we're looking at doing is expanding our CAD system. So currently our CAD system is housed in-house. We have to put servers up. We have to maintain the physical devices and servers. We're looking at moving to the cloud for our CAD system. The nice thing about that is that doesn't cause any one point of failure in the physical county. We can lose a building and set up somewhere else and operate out of the CAD. It's a huge enhancement. Now, obviously, it comes with cost. But looking at moving forward, especially as we're moving in the new building, this is kind of the prime opportunity to do that. So those are some of the main projects. Real quickly, as far as dollar value goes, the increase to our budget this year, obviously last year when we merged with EMA, we took on $1 million of EMA's general fund liability. So we moved that over to PSAP Lit last year. This year, we're looking at assuming, I want to say, it's roughly $1.4 million that we are assuming from general fund. So there's a handful of new things. The 7 positions that Mr. Wood mentioned, those would be fully funded out of PSAP Lit for his personnel. We would do a reimbursement back to general fund out of PSAP Lit for those positions. ISS this year, one of the new things that we're doing is we're getting basically licensing that we're paying. So since ISS is paying for our licenses for Microsoft Office, we can use PSAP Lit to reimburse back to general fund for that. So that's roughly $270,000. The big fiber ring, which is the connection for all the county buildings, we're assuming payment of that, and that's roughly $100,000, $180,000 a year. And a new thing this year that we obviously haven't done the past couple of years is our insurance. We're now kicking in money from PSAP Lit to insurance.
Let me ask you a question. How much are you asking from the county general fund?
The county general request is $467,284.
Okay, so what I would say to you, I'm just speaking personally, I'm not speaking for the rest of them. I assume there's a group like this that looks at your finances on a monthly basis or ongoing. We're in charge of county general. You get 911 tax money, and I'm assuming there's a group out there that does more in-depth look at your budget than we do, since we don't control 911 money. So 400,000 is what's coming county from general. That's fine with me, you know. I'm so old, I was back when they charged it on your phone bill, it came through us. It's different now. So I'm assuming there's somebody besides us doing a more in-depth oversight of your budget than we are. You know what I mean? I appreciate everything you've told us and whatnot. and I don't want to be disrespectful, but I don't control your money, okay? Somebody else, and I'm hoping they pay as much attention to that money as we do to ours.
Yeah, so the 911 Executive Board is currently the board that approves the budget, and the budget goes through there. So.
Yeah, so they're looking at over your shoulder. Anybody have anything else for these guys? I got one thing for you, Chad.
Yes, sir.
You guys put out the rave alerts.
Yes, sir.
How about time on the clock? Military time don't help people that aren't in the military. 1,900 hours don't mean nothing to me.
Yes, sir.
Oh, and you're getting new vehicles?
Yes.
Yeah.
It's
Put a sign on them, will you?
Yeah, every vehicle we have is
You've
marked
done
with a
better.
seal.
You've
Yes.
done better since our last conversation.
Yes, every vehicle that we order is logo.
Nobody wants to see a black vehicle driving around that's unmarked.
Yes, sir.
Okay.
We're aware of the sensitivities of that, and they all have big
Black's
emergency
okay with
operations.
me. I just want to see some marking on it.
Sir, our new logo even
Yeah,
has the county
okay.
symbol right in the middle of it. So
All right.
we're very proud of that. So, thank you.
Anybody else?
I would just say, I think all of us have seen the last 3 weeks, probably the work that started. I got to see it from inside out. It's been excellent, from the top down, from every place here in Hamilton County that you guys have been, and then places you probably didn't think you'd ever go, and meetings and community outreach events and answering questions. It has been very impressive, and I think really everybody in all of the counties and cities in all aspects has really been firing all cylinders. But you guys have killed it. You've been out there, and like I said, I got to experience it firsthand on both sides. So, great job.
I'd echo the same thing. I've had a half a dozen constituent requests, and you guys just killed it. You know, Ryan, your whole team has done an excellent job.
Go get us some of that federal money, will you?
Well, I would recommend, I'd recommend everyone on council find some time with Tim to give you a little tour of the site. I went out there yesterday with them. It's, they're just down at 106 there in Hazeldale. It's not something you would anticipate ever seeing in Hamilton County or the United States. It's really,
I know you guys have seen it. I told people it doesn't look like a bomb went off. It doesn't look like a flood did this. It looks post-apocalyptic or something out of a movie. It doesn't. You can't fathom it.
And that's part of we've said from day one, it's a marathon and not a sprint. And this is going to be such a long recovery process of the major infrastructure improvements there and the repairs, but even a person with their home that wasn't properly insured for the flooding or that was impacted by it or just has family nuance, it's going to be a long time for them to feel whole again. And that federal recovery process is, we learn something every day with that process, and it's just as convoluted as you would anticipate.
I understand.
Every team doing it, but we're working very hard, tracking every penny, meeting every requirement that state and the feds have of us to make sure that we get every possible dime back that we can.
Yep. Good work. Thank you.
Thank you.
Thank you.
Extension Service.
Good morning.
Good morning.
Morning.
Just like to begin to thank all of you, sorry, my voice is a little hoarse, just for all your support, for the extension service, the programs, but also all of the facilities and all that's happening at the fairgrounds. So thank you very much. In the extension service, we sent a cover letter, hopefully, and it worked with Sue early on, looking at our budget. Our total operating request is $295,283 for the operating budget. This is an increase of $94,470. The increase comes in that 3001 series for two line items. One is the security contract that we have with the buildings and the rentals. So when we talk about extension, the operation, this is for the grounds and operations as well as the programming budget for operations. So we did increase that. The more that the facilities are used, obviously we need, those professional services. And then the second is the Purdue Extension's, the county's share of Purdue Extension's contractual services. And so that is an increase this year of that line item. Extension is moving to sort of a regional-based service. versus now, the county 4-H is not changing. Our staff, a couple of our roles are changing a little bit, but we're still housed here. But they're taking out, and part of that is just an antiquated way that they assessed. They were using population figures. The last one was done in 1989. And so obviously that was part of our increase with that service. But with that, we've also taken out those educators, so we've taken out computers out of that. We've also taken out the mileage. So that amount that's getting put in Purdue will take care of that. So that it's 200,000 in the line item, but when you take that reduces that cost somewhat. Purdue is also going to add a 4th educator to our staff with some of our changes. So we'll actually see more services in our youth department as we go forward. So a different change and increase just hopefully modernizes. And I think the big thing is that, it's not a change, it's not a reduction in our mission, it's just in how we deliver it. We'll be using some specialists and from some other counties as well. So
I want to take a moment to do a shout out to Susan and her staff. I serve as the liaison to the Extension Board from Council, and with this reorganization, how Purdue did it with the Extension services around the state, a shout out to our Susan, because she is now a regional manager for counties of Boone, Hamilton, and Madison. So she has oversight of all those extension services, and that's a testament to her accomplishments as an extension professional and what the value and the trust that Purdue has in her, and as we do. So I want to shout out to Susan, and then Kathleen Bodie, who's also the 4-H person, extension services for our county, is now a regional 4-H and youth, and she deserves a credit. So we've been very fortunate to be served by these 2 ladies plus the rest of the staff, and so thank you. And I know Susan will still keep good management of Hamilton County, but she also brings that expertise and regional. We'll have specialists from those counties too that she can slot into our needs. So thank you, Susan.
thank you, Sue.
Anybody else? Thank you.
Thank you very much.
I do have a question. This is real quick. Are you billing the county for the time that they're using that facility for the disaster? And I'm only saying this because we need to be tracking the costs that go to it, and that should be reimbursable, what shouldn't it?
That's a good question.
Okay, well, that's a good question. I mean, we can actually easily do that. I mean, we know exactly
I think that would be a
So,
really smart thing for us to do.
Oh, yeah.
Could be, you mean as far as going back for the county for reimbursement? Okay.
Yep.
So we work with Chad, Steve?
Yeah, Chad,
Yep.
All?
yeah.
Send it to Brenda. All your bills, send it to them.
Thank you.
Yep, thank you.
Planning.
Good call on that.
Yeah.
I can go home now?
Yes.
Yeah, you earned your pay.
Earned your nickel today.
Good morning.
Good morning, CJ.
The planning department, we held it flat except for the proposed salary increases from the council. So if there's any questions about the planning department, I'll be happy to answer them.
I don't think there's any questions on that.
Okay?
How about our sewer?
On the HCRED, or Hamilton County Regional Utility District, my ask was originally going to be $2.184 million for the upcoming year. Because we had some extra costs in operation, but we've made some operational changes. So I've been able to reduce that by $106,000. So I want to go back to the $2.078 million that we've had in the past, knowing that that should be able to fund us next year. We still have some unknowns because we haven't, operated for a full year yet. We're getting really close. Next year, I will be able to have a lot more operational costs nailed down.
Okay, so what was the request for HCRED?
$2.078 million.
And we appreciate you take care of it, but it takes us $2.8 million just to keep the lights on.
At this point, yes.
On top of the bonding we do to expand the sewer to parts unknown for development unknown.
You said 2.08?
2.078.
2.078.
The fund says it's got $2.9 million in the bank.
That is correct.
So why aren't you spending that money?
We will be spending probably another $1 million of that this year before we get to the end of this year. And then, like I said, I don't know exactly what operational cost is going to look like through the end of this year and into next year. So as I get into next year, then I will have a lot more correct numbers to go by.
So if we need to grab $1 million, you've already got almost $3 million in cash against a $2 million ask. So if we need $1 million, we can grab $1 million. Thank you.
Thanks, CJ.
Thank you.
Prosecutor. Morning, Josh.
Came in person.
Hello, yeah. I didn't know if I was going to be able to make it, but my murder trial scheduled next week got continued, so I'm here.
Okay. Happy to see you.
Thank you.
Which is more fun, the murder trial or this?
The trial's more fun. But spending time with all of you is a great pleasure.
There you go.
All right, you want me to just go through each item, or?
You can tell me how many people you're asking for.
All right, so there's kind of a couple different groupings. So one is for Superior Court 8. So for because there's 8 and 9. 9 is not going to have any criminal jurisdiction, as I understand it, so we're having no ask for that. Superior Court 8 is going to be a misdemeanor level 6 felony high volume court. So we're asking for our standard 2 prosecutors for that and 1 support staff.
Total.
And then, they are going to have some domestic violence cases in there, but they're actually pulling them from currently in Court 3 into there. So we have 2 domestic violence prosecutor positions, so we'll just move 1 into the Court 8. So we're not asking for any more for that.
Okay, total bodies that you're gonna.
Okay, our total bodies are gonna be 6 that we're asking for.
Okay.
So then there's 2 others, are gonna be two more prosecutors on our major felony, our DPA 2 bandwidth, but those are pursuant to a federal grant from the Big Beautiful Bill, that SALSA program, Special Attorney Program with the United States Attorneys. We have been awarded the grant. These positions would be for 3 years. The federal government's paying for it. So we're just asking for the budget line item for that, and we're actually trying to do that quicker because we've got since I made the ask, we got the grant, so we're trying to get it on ASAP so we can get those people out working with them.
Okay.
And then the 6th position is a second office investigator. This would be one that would be focused on adult protective services investigations. This is something about a year ago I had asked for. I'd applied for a federal grant and I had asked to get the position added. It had been granted pending that grant. But for this year's budget, I went ahead and I'm asking for it just to have the second investigator position. Now then, it used to be that Adult Protective Services had an investigator that would be embedded in a prosecutor's office that would handle, they'd had one for every 3 or 4 counties in the state. Ours was located in Marion County and would handle Adult Protective Services investigations. They restructured how Adult Protective Services work and moved that over to Family Service, FSSA, and basically got rid of it. And so there isn't anybody that's really appropriately dealing with these kind of investigations for one of our most vulnerable parts of our community. So kind of right now, we've been kind of putting a Band-Aid on it, and the things we get, we send to the local agencies. We have somebody at the sheriff's office that is kind of working on it, but this is something that's traditionally been in the prosecutor's office. I think it works better that way. A crucial thing is a lot of these cases don't turn into a charged crime because, an elderly person who has dementia or whatever gets taken advantage of and is writing checks to people. Can we prove that they're being taken advantage of, that there isn't, the intent to do it, but we can stop it from happening? And that's what a lot of the investigations are getting in there and stopping this from happening. And that's just something that we're very concerned hasn't been happening. So we're asking for that to just be a second investigator position. We have gotten that grant. So that's another grant that was given, but I don't want that to be contingent on that grant being here. I just want to have the position, and then we'll do everything we can to get outside funding to pay for it. And just as another thing, the standards, the national standards for prosecutors' offices across the country is one in-house investigator for every like 3.6 prosecutors. So for us, with our like 38 prosecutors, that would be 10 in-house investigators. We currently have one. Now, we're fortunate here in Hamilton County to have such wonderful police departments and sheriff's department, and they do great work, and we don't need what the rest of the country needs. But a second one would be very helpful for us in general also. There's a lot of situations where something's investigated by patrol, defense, we file the case, and the defense provides us with another witness, a defense witness that doesn't live, if it's a Carmel case, doesn't live in Carmel. So who are we going to have go question person? If they live in Indianapolis, that gets to be a real problem for us to do a follow-up investigation, especially when it's not a detective on the case. Now, when it's a high pro, when it's a murder, when it's a major felony case, they're very helpful. When it's a misdemeanor or a level 6 felony case, and with the volume and everything else, it's not that the police agencies won't assist us, but we can't just tell them to go do it. It's nice to have someone that we can have do it when we want them to do it, and do it in the manner with the chain of command that we request them to do it. And so these are things where, we have a lot of day-to-day things that Bill Inglis, our current in-house investigator, does. He does a lot of finding witnesses and serving subpoenas on them and stuff like that. But there is other detective work that it would be nice for us to have our in-house one, and especially to deal with this adult protective services stuff.
I have a question. When I
Yes.
was reading through it, and you were requesting a reevaluation of your office manager.
We pulled that.
You pulled that?
Yes.
Oh, okay, thank you.
You're welcome.
What happens when the grant stops?
Come again?
What happens when the grant stops for the federal grant, the grant funding for your 2 deputy prosecutor felonies?
So when that stops, so for the people we're looking at, one of the people is outside that the U.S. attorney suggested. And that person is understanding that when the grant stops, that's it. I mean, if we have an open position, we will probably extend an offer. The feds might end up hiring her. Excuse me. For our in-house person, my goal is to make sure that we have a spot for that person to come back to the office, like its own line item. So either I'll leave one open or make sure, as we get closer, that there's an open spot for that
So
person.
you alert them that position is funded by grants?
Yes, my intention is to have some kind of put together some kind of document, either we do it or with the assistance of county legal, that, says, when this is over, this, line item's done, that they'll sign off understanding that.
Okay.
I believe it was communicated with you that sheriff's contract might roll up underneath you.
Yes.
You're good with that?
Yeah, so there was a tiny amount of heartache at the idea. Part of our questioning of our forensic interviewers is establishing that they are a separate entity, that they don't work for the prosecutor's office. But they still wouldn't work for me anymore. I mean, we're part of a multidisciplinary team, and we have our own rules of engagement that we deal with. But also, like in Marion County, their forensic interview is in-house, is fully part of the prosecutor's office. So I discussed with my special victims unit supervisor, and we kind of worked this out, and we're fine with it. We'll just slightly change their questioning of the witnesses at trial. But ultimately, the nature of their forensic interviewing is as such that it is very much designed to be fine for that aspect.
Anybody else got questions for the prosecutor? Thank you.
Thank you very much.
Do you want to take a break?
Let's do one more.
One more?
Yeah, I'm gonna take a break. My lovely wife is here.
Favoritism here.
No questions for this one.
That's right. There should not be. Good morning. How are you?
Good morning.
The recorder's office continues to maintain functioning from our fees that we collect. And I did not ask for any new employees. I've actually maintained, I've had a couple of retirements and I have not filled those positions. We moved to a new software system last year, and we are working more efficiently and also collecting additional fees. I have a new fund, 1154 Enhanced Access Fund, that we are now collecting on top of the other fees that we've collected in the past. So, does anyone have?
Anybody got questions? Now, remember, recorder's office doesn't take any money from the county general. They're all self-funded through the fees they charge the public.
So why are we reviewing this?
I don't even, it's on the list, so.
You can tell Todd and Jason next year that I don't have to come. That's
I
fine.
just want to be fair to the
Yes,
other people
that's
that we
right.
challenged on that.
Well, I have a
You're not
question.
asking for cars, are
Yeah,
you?
no new vehicles.
I'll take one.
You'll take your car?
Well, I have a question. Is your fee schedule set by the state or?
Actually, the Recorder's Office, the Recorders Association maintains that, and we did an increase of our fees in 2017 was the last time that we've had a fee change. So we are bouncing around the idea of trying to, or consider starting to move that in and through legislation in the next few years, since it's been since 2017. But I am fortunate that I have plenty of money to maintain my office. My constituents in the state are not as fortunate as I am sometimes, so I think it's more so for those smaller counties and the counties that are being hit more by the changes in the state.
Thank you.
Okay,
Anybody else? Thank you.
have a good day.
Thank you.
Let's take a break. Just hit this button here. All right, we're back. Next up is the sheriff. All right.
Good morning, everyone.
Good morning.
I have presented our budget to you in your packet. The operational budget is just a little bit over a 4% increase from last year. The majority of that is from our inmate medical services. Your common questions about vehicles, we're asking for one new vehicle.
One vehicle?
One new vehicle, a transport van. And then as far as the number of positions, hope you guys are all sitting down. All right, so in 2020, our jail staff was at 100 corrections officers. Today in 2026, it is at 99. We've moved one of those positions to the courthouse, and that position has remained there. We've had a tremendous amount of need and a lot of increase in the services at the jail, the number of bookends, the number of bookouts. The jail population this week is at 450. So we hired a company to come in and do a staff study. That was all presented to you guys by email from Kelly. That study said that we need 18 new positions in the jail. We are asking for 13 total corrections officers, 9 for the jail, 3 for the courthouse, and 1 for the juvenile center. We have not asked for those positions along the way because we have not been able to historically recruit and fill even the number of open positions that we had. Thanks to the increase in corrections officer salary that you guys have given, we are now able to fill those corrections officer positions. And unfortunately, we're asking for a huge ask now to fill at least half of those this year and then maybe some more in the future. I brought in Captain Dustin Castor to talk a little bit more about that study and more about the operations in the jail. Before he comes up, I just wanted to commend him and his staff. They did receive their national jail accreditation just a couple of weeks ago, and we are the first jail in the state to have that national level of accreditation. So super proud of them and the work that they are doing. But Captain Dustin Castor.
Hey, thank you. I appreciate it. So yes, we took the time to have a staff study done. We used NIGO to conduct our study, and they contracted a local person to handle that. One of the things they took into account when they did our staff study was the relief factor. So yes, we have enough staff to run our jail when everybody's there, nobody's taking time off, nobody's on FMLA, nobody's calling in sick, which that's not the case. So the problem is whenever we have those circumstances, we have to take a post that has to be filled 24/7, and we're not able to fill that, or we have to make drastic decisions to fill that, such as locking the jail down. And when we have to lock the jail down, then we have to cut programming and all the stuff that we're proud as Hamilton County to offer and probably consider us best in the state as far as in the nation, the programming that we offer. So it hurts to do that stuff, but unfortunately we have to make decisions that I hope to not have to make in the future. So that's why we're asking for these positions, and these positions will also cover vacancies. So when we have vacancies in the facility, it takes multiple weeks, months to get those filled. That gives us that little bit more relief to where those squads that are hurting, that manpower is not as bad shape that as we're waiting to get that position filled.
How many did you want in the jail?
9 for the jail.
And then 1 juvenile and?
And 3 for the courthouse. Okay. So a total of 13 new positions.
Question that or I might have missed it. You have 450 approximate inmates, 2026, and you mentioned 2020 numbers. What were the number of inmates then?
Well, that was a very unprecedented year, and it was kind of all over the board, but it got down to 300.
No, we were at 200 during COVID.
Okay.
Last year we were at 380. So we're seeing about a 18 to 20% increase in arrest and population in the jail. And I foresee more with the courts opening up. I foresee the justice system moving a little faster, and we're going to get more people behind bars in our jail.
Yeah, and I would say the big part of the manpower ask is not just, definitely the population is part of that, but the number of bookends and bookouts, the amount of work that they're doing to process people through is a lot more and more cumbersome.
What is the lead time for a corrections officer to be productive if you hire somebody?
At least a year.
Okay.
Yeah, at least a year. It's just from the time they start, it's 13 weeks before they're even on their own. And then we say they're at least a year out before we actually would trust them to be 100% compliant.
I have one question. With
Yes,
the
sir.
change that they're making in the pods, I think they're doing the construction to make one like a health focus, mental health or whatever. Is your plan for all these staff incorporating that plan?
Correct, yes.
Okay.
Yeah, that would definitely help. Actually, that's going to help our staffing.
That's right.
I can't speak for the future of our population, just what I'm looking at now, but with the annex building currently being ran, we have to staff that with up to 5 officers for a very low amount of inmates, but unfortunately it's across the hall, so we have to staff it heavy. If we were to get the North Pod built out, depending on our population, we may be able to move those inmates back into the main jail, which it's easier to maintain staffing wise.
That's what I remember when they mentioned it, so I was, okay.
Based on the increased number of arrests, the increased number of court cases, is there a way for you to kind of project where you think the inmate count's going to be a year from now?
It's questionable. I've tried to manage it all year. We started at the beginning of the year running around a population of 400, and here we are in September in the 450s. So we've seen a drastic increase this year. This year alone, we've received 4,250 arrests, so 4,250 arrests from outside agencies. I think a lot of this is all of our outside cities are very proactive in law enforcement, and they're going to make arrests in the county, and we're the hub. So we're going to get them. And
The study actually had to find some way to work backwards to get to the 13. So they came up with a number of expected inmates at that point, right?
Yeah.
What was that number?
I don't recall off the top of my head. I apologize. Yep.
If I understood your question correctly, they were using current numbers.
Oh,
And
okay.
they came up with 18.
Okay,
Yeah.
thank you.
Yeah.
So that's not future projections. They're saying you need 18 with what we have
That
right
is
now.
correct. Yeah, that is right now. That's yep.
Any more questions for the sheriff? Thanks, fellas.
Thank you. Appreciate it.
And congratulations.
Soil and water.
Good morning.
Good morning.
So I followed your budget instructions. I only have salary increases based on performance reviews. So not asking for anything more than that, not asking for any new positions or any vehicles. I do currently have one vacant part-time position that I'm in the process of filling.
That's what we like to hear. You're excused.
Have a good one.
Thank you.
Thanks.
Surveyor.
I don't know how I'm supposed to go after that.
Yeah, there you go, Gary.
Well, good morning. Thank you all for reviewing and considering my 2027 budget request. We did try to limit our equipment and materials needs to just the critical items. The majority of the increases are associated with salaries. And the new position that I'm requesting, and we are requesting, they're not additional vehicles, but we are looking at replacement of 4 existing vehicles.
So you'll add 4, but you'll get rid of 4?
Correct.
They won't be sitting in our parking lot.
Right now, they will not be in the parking lot. They're down at the new building. So 2 of the vehicles are at least 16 years old, if not older.
That was an evasive political answer. When you get 4 new ones, 4 are gonna go away.
Well,
Out of the county fleet.
there's one lease that we'd like to buy out.
Okay.
Because it's set up the way with all the equipment that we need. So yes, there'll be no net increase in vehicle spaces.
That's the right answer.
Correct.
How about new people?
I do have one request for a new person. And I'm terming that as the plan review manager. One of the laments my office always has is that our plan reviews, so we review all development projects, all subdivisions, commercial developments that occur in the county. And we always need more plan review staff. One of the common laments is our reviews take too long. Just as a comparison, Carmel, Westfield, Noblesville, and Fishers, they have 12 plan reviewers and 8.
For what?
That's just what as an order of
They got
magnitude.
surveyors of their own?
No, we do joint reviews of development projects because they have their own infrastructure, roads and streets and whatnot, and we have to review it for drainage. But they have 12 plan reviewers and 8 MS4 program staff. My office has 4 plan reviewers and 1 for MS4, and we review all the same projects that they do. So they're much more staffed up than we are. So we continue to try to do our best, but the volume, as everyone knows, continues to go. It's great to be one of the fastest growing counties and continuing to be that, but it does tax the office. So short of adding more staff, my thought was creating this new position to manage the plan review staff. For me to be, there's twofold. I feel that staff, the 4 plan reviewers that I have, spend a lot of time meeting with applicants and going on site visits and corresponding with the applicants and whatnot. This person would take some of that load off of the plan reviewers so they could focus on the immediate tasks of reviewing the plans for conformance to standards, writing reports to the drainage board, and actually processing the applications. But mainly the person would serve as a more ready resource to those plan reviewers. Right now, yes, sir.
Question. I know Carmel and others use outside contracted plan review. So I mean, is there a number does that include contracted employees?
So it is something that we've considered, and I'm still open to that.
I would think if you have a manager like this, that he can not only own staff, but also outsourcing as well could be part of that responsibility.
Correct.
With the floods that we just had, I imagine next year might be a very extensive review plan for the kind of damage with all the levees and berms that are going to have to be rebuilt.
Yes, we would review all of those.
So
exactly.
I imagine that's going to be that might be a very, next year specifically might be a pretty taxing year.
Yes. But that was one of the thoughts, was this manager, if we do start to hire out some aspects to consultants for plan review, that person could manage those consultants. And one thing that I'm also considering is right now the plan reviewers review projects by area in the county. The reason for that is they have the expertise in their specific area of the county, and they also attend what's called the Technical Advisory Committee. So Fishers has a TAC meeting, Carmel has a TAC meeting. These individual people go to those meetings to provide our comments. But I've been thinking about changing that to a more of a rotating schedule or assignment of those plan reviews to spread the load. Because right now, Noblesville is seeing the highest amount of applications, and my Noblesville plan reviewer is overwhelmed, where Westfield is a little on the light side. But to go to that position, or to that organization rather, I would need this position to manage those assignments. In the end, it would streamline the process and just allow the office to be better responsive to the needs of the applicants and approve the projects faster.
If you want economic development, we have to make it easy to do business.
Yes, we try. I mean, we really do try to get things through as quickly as possible, but it just comes down to workload and staff. Yes.
Anybody else got anything for the?
I have just a general question. You're budgeting for $106,000 for the Entera water study. How long is that water study going to continue?
We'd like it to continue indefinitely.
Okay, thank you. Okay.
So we will continue to include that in the budget. I will say the one part, I am reaching out to the Indiana Finance Authority to see if what their plans are to continue to fund that. Right now, it's split 50-50. The state finances half of that contract. If they do not have plans to continue to fund that, we would have to look to other sources for that. Whether that's a grant or asking the other communities in the county to see if they're willing to participate to fund that.
My last question.
Yes, sir.
Drones and management of your infrastructure. Are you guys using that?
We do. We have a drone and we use it more and more.
Yeah,
yes.
I've seen that seems to be growing, and not only that, but the AI on the backside actually doing a lot of the analysis on it.
Yes. The one thing the drones can't do for us yet, I say yet, the technology continues to develop, is we can get, I'd say 80% of the information we need from a ground survey for design purposes, maintenance purposes. Most of our open ditches anyway have water in them, and so that reflects the reflects the signal off. So we still have to physically go out and survey the flow line of the ditches. So we'll see, maybe over time, they'll be able to overcome that. So, but it does help. It still reduces the overall amount of time that staff spends out surveying in the field.
Here's my last question. When somebody calls your office, does a human being answer the phone?
Yes. Yes.
All day, every day?
All day, every day, to the extent we can provide that, yes.
Okay, that's all I had. Anybody else? Thank you.
Thank you very much.
Thanks.
Treasure.
Good morning.
Good morning.
Don't know if you guys know, but I became a grandma last week.
Congratulations.
I have twins, Colton and Hazley. A little premature, they're in the NICU, but really excited. But you guys did tear me away from them today.
Are you asking for new people?
Absolutely not.
How about cars?
No cars. I'd love to have a parking spot, but you know, I'm not
Yeah.
greedy.
Can't do nothing about the parking spots.
Fine. So the only increase I have is just staff salaries. And I typically give back quite a bit of my budget at the end of the year, so.
Okay.
Make us a lot of
Yeah,
money.
thanks for making us
Yeah.
money on the
Yes,
interest.
thank you.
Yes.
Right
Here,
now,
here.
as of the end of July, interest income at 10.1 million.
You know that's all our money.
I know whose money it is, Brad, 100%.
We've had that conversation.
So many times.
Our money.
Our,
Yes.
not our money, our.
Our.
Yeah, I do hear from the bankers that you're tough on them and you make them earn every nickel.
I try, I really try.
Anything else for the treasurer?
No, we appreciate you. Go back to
Thank
those
you,
babies.
Grandma.
Yes.
Yep, thanks.
Thank
Congrats
you.
Probation. Madonna,
Brett.
how many years have we been doing this, Madonna?
Long time.
What you got for us today?
Not a thing. I did drive behind a really nice Yukon today, though. So if you're offering a new vehicle,
I'm not offering.
I mean, it was pretty sharp.
These people that say, "Oh yeah, I need foot," that don't mean they're getting them.
I would settle
They're
for the
just
gas to
asking.
put in mine. If you, no new people,
Okay,
questions.
you're pretty easy, Madonna.
We're running a pretty good department. So
Yep.
thank
Thank
you.
you.
Thank you, Madonna.
Thanks to the auditor's office too. They were big help.
Highway. Look, he's got a big book with him.
He's got a big budget.
He
Go
does.
ahead, go ahead and
He does
say,
have a big budget.
go ahead and say it, you're saving the best for last, right? Our budget submittal really is not a whole lot different than it has been in previous years. We're continuing to keep our federal aid projects moving forward. And a lot of this is keeping the development of those projects moving in terms of engineering and right-of-way. We have 6 that are coming to letting in 2027. So those matching funds are budgeted in there as well. We're not asking for any new positions. There were 3 positions I did ask for a step bump in. In terms of vehicles, we have a snow truck. We're asking for 2 SUVs that will be replacements. Those are built into the highway fund budgeting. I will add a comment that Mike Reuter mentioned $584,000 coming back, QMCAP. That's part of that $1.9 million reimbursements that we.
Oh, it
The
is.
email that was-
Aw.
So that's part of that overall
Okay.
goal. So
Good.
a lot of those were in other funds, not just QMCAP. He just mentioned QMCAP.
Yeah.
He may not have known about the others. I don't know, but there's actually more money than that coming back to us. It should be here in maybe 30 days.
Good.
So that's ongoing. I guess what I would say is our challenge has always been trying to keep our pavements preserved to a certain level of condition. And we've been able to do that largely with the help of community crossings. That program, as you know, the General Assembly kind of gutted that and reduced that considerably. It's still out there and we're still going after it. In fact, there's a call out right now. So we'll be applying for that. It used to be kind of, you could count on getting that. I'm not so sure anymore because a lot of that money is now going to other places that the General Assembly thought it should go to.
Yeah, they meet every year, don't they?
Yeah. Yeah, but I mean, it's still a challenge, but hopefully we'll be successful in that. Of course, we don't have the wheel tax, so we don't get the lane mile distribution from that or that revenue either, but nevertheless, that's kind of our challenge, is keeping our pavements in good condition. Our bridge program, I think what we have outlined here in 1138 is on par with trying to do preservation, as well as trying to make improvements in some of the infrastructure that needs to be rehabilitated or replaced. With that, if you have questions, I can touch a little bit on the bridge if you want to talk about that a minute, or not.
In a second. Belfour Bridge inspected, we good?
Belfour Bridge, good.
Yep. Good. We identified 90 small structures a couple years ago that had to be replaced. Is this keeping up with that?
Yeah, I mean, we plan to do that as an ongoing program during normal budgeting process, and that's built into this as well.
And the last thing, when we met with Highway yesterday, we talked about there's 3 projects that they have gone after for federal funding on, and we had talked about before how do we keep that? Well, the problem is that they don't know that they're going to get it till after the budget cycle is done, and so what we were contemplating at that area was maybe putting money set aside in his budget for just that purpose, which would be doing the matching for our federal fund projects when he puts them up there. We can talk about that when we deliberate later, but I think there's a project that's about 1.2 would be our match, if I'm not mistaken, right?
Well, it's not 1.2, it would be to get the project kicked off.
Kicked off, yeah.
For engineering, basically. What happens is, we budget for next year, and we budget so early, these federal calls come out later in the year. We apply for them. We usually don't know if we're successful until the first of, like right now, it won't be till the 1st of 2027. If we are successful in landing one of those, then in order to get it kicked off and going, we would need the funding to start the engineering work. And so we don't normally know when we do our budget that we're even going to get anything, or maybe even what we're going to apply for. But then that happens. In the past, we've either tried to find the money somewhere that we weren't going to be using, or move money around, or we come and get an additional appropriation to try to start the engineering for that.
I have a question. How many of those applications do you do on average each year, and what's the success rate?
We've done anywhere from like 4 to 7. And this year we're just doing 3 right now. There might be another one coming up with an NDOT call. We're usually successful in getting 1 or 2.
Okay.
Anybody else? Brad, you can give us an update on the bridge that got destroyed, but my question is, 146 in Hazeldale.
Right.
That's our next big project.
Right.
County project. Will it be impacted or delayed because of the bridge washout on down the road?
No, we're not anticipating that.
And we're not going to use the same engineer and the same contractor, so they're trying to do 2 different things?
Well, we don't know who the contractor would be.
Well, let's think about that when we're letting that bid, because I go by, and it's not any your fault, but I go by a lot of road projects. Materials are sitting there, equipment's sitting there. There ain't no men there doing that job. And then 3 days later, they're working for a little bit. It seems like they got 3 jobs going, but only 1 crew.
Right.
You know what I mean?
I understand.
What about the bridge? What can you tell us?
Well, just back quickly on 146 Hazeldale, we did open bids on that, if you guys know that or not.
You should land with that. That's good news.
Yeah, I should have.
I don't know. I don't know if we want the crew going back and forth.
It appears to be a very good bid, so that's going to help in the financing of that location. In terms of the bridge that has failed, we have been working with the Department of Transportation, and we have received word that we are eligible to use Federal Highways Emergency Relief Funding. And that funding is geared toward just this type of project. It's geared toward a disaster, in which you need to get the roadway opened up quickly as possible for various reasons, safety, economic development, mobility. So we're moving toward that quickly. There's lots of unknowns yet on how it all is going to work out, but as of right now, what we are doing is we've gotten, the commissioners have given us permission to go out and get quotes to demolish the site, remove what can be removed, and kind of stabilize it. Right now, it's a safety problem out there, really. We've heard of people trying to climb around on that thing. This is not safe.
Is
So
that what you guys did yesterday?
I had a yellow vest on, so, and harness, so that's good.
So in my, and in my discussions with NDOT on that part of it, they say they're gonna qualify that as kind of the emergency response, initial response, which potentially is 100% funded. So we plan to open bids on that quote for that work on the 14th of this month. In the meantime, our consultant is working to design the structure. They've been putting in a lot of time as well. And we hope to have that go out for bids and a contractor selected by the first part of November. A lot of these, we have to go back to NDOT and FHWA to get approvals of the contracts before we can actually give a notice to proceed. The money end of it on the ultimate replacement of the bridge, looks to be an 80-20 project. So the county would have to pay 20% of what that bid would be. We would have to pay NDOT that money. They hold the federal funding. Ultimately, they pay the contractor. I'm not sure how that mechanism is going to work out exactly. That's how it works on a normal federal aid job. But they're saying that it's a possibility that we would use our contracting mechanism and we would award the contract and we would hold the contract for the construction. I'm not quite certain that's the case. Normally, we would work through NDOT's contract section. They would award the contract. That's still hazy, and I haven't got that clarified yet. So we're moving forward, hopefully have a contractor going. We're examining, potentially trying to even procure some items ahead of time that have long lead times, still being looked at. So with good luck, a year from now, it might be back in business.
So with the bid coming in on Hazeldown 146, do you feel that that's going to open up some money in our major bridge to maybe fund the 20% on this bridge?
Except that's not a major bridge.
It's not. That won't be big enough.
No, it's not big enough for a major bridge.
Not
But it will open up some funding potentially that.
It's now a major bridge.
You sure?
Right now it's one.
I mean, it might.
Right now.
It will be a little bit bigger, so I should maybe say.
It might. So if it gets to 199 feet, say, Chris, I need it to be 200. So, okay.
What do you, just using your years of experience, matching it, what should the county council prepare for the washout bridge that we're going to, not reimbursement, just what do we need to have on hand, dollar-wise?
The one thing I don't know as well is the funding of the demolition of the structure. That's probably a reimbursement. That cost we would have to front. So that amount, $400,000 or $500,000, I don't know for sure. And then it would be the match of what the bid is that we receive.
I understand.
And that could be.
What, tell me, is it 5 million? Is it 10 million?
If I were going to tell you to be conservative, I would probably say 5 million.
Okay. That's what I know, that there's a lot of unknowns.
Right.
But we're in a budget cycle and we got to decide.
And the other associated cost of that, of course, we have to pay the consultant. And
Well, of course.
there'll be an inspection component to it also.
Okay.
I know this is probably too early of a question, but there were some comments back and forth over like projections on when this bridge is rebuilt. Will it be possible to have one half of it open so there could be a maintained flow of traffic since it is a major thoroughfare? Has there been discussions around potentially being able to move traffic through there?
Not really seriously in doing that.
Okay.
We looked at and investigated temporary structures.
Yeah.
That can be moved in and put in place. Very, very expensive to do that. They're brought in place. You still have to build a foundation for those.
Okay.
And you still have to then assemble those. I think it was like 15 semi-loads of components that would have to be brought in, trucked in, and put together. It wasn't really a viable option to do it that way. To get it done quickly, you need to let the contractor have the full site and not have to worry about moving traffic around.
Okay, thank you.
Thanks, Brad.
Okay, thank you, guys.
Solid waste. Here's Leslie.
Now it's the best for last, before lunch. So good morning. If you have been able to review my monthly reports, we have been having a record-breaking year, busiest year since the 2020-2022 season, where we did definitely break all the records. And when we bring more stuff in, that increases our expenses to pay for proper disposal going out. I did have a minor adjustment in my packet too that I wanted to let you all know about. You may recall that a lease was proposed last year for 2026. It has now been signed and will be implemented in the form of $250,000 that I'm paying back to County General for the remodeling of both the Pleasant Street office and the drop-off building.
Now, that's $250,000 a year?
Yes, sir. There is a term of 10 years on that lease as well. I do want to point out that we do pay County General back for liability insurance as well. For this year, we paid $176,000, so total $420,000 paid to County General. I estimated $185,000 for liability funds for 2027, but I have since heard from the auditor's office and GRC office that they are going to reduce that in 2027 down to $80,000. So the extra money I want to put towards, or in your minds, if you would think of it that way, putting towards my biggest ask for 2027, which is an additional full-time person. Since being director, I have not asked for a full-time person. This would be the first full-time person the HHW Center has added since 2016. So it's been a while. We have done what we can with part-time people, but at this point, I think we really need to add another person. There's just so much benefit time that a lot of our people have been very loyal employees for going on 20 years for some of them. Even some of my part-time have been with me for 10 years. So to be able to accommodate the benefit time off, I think at this point we need to add another person. As Brad likes to point out every year, we are a separate taxing levy.
That's why the commissioners decided to charge rent. They actually are on the property tax roll. They are a separate taxing entity, so they're not, they get money that's not coming out of County General.
Correct. I estimate for this year to be a little under 2 million, for 2027 a little over 2 million. I work with Mike Reuter on those numbers.
Would you be able to pay for your new person out of your own revenue?
Yes, yes.
There's the
Especially
magic
with the liability insurance being reduced by 100,000, I absolutely can. That new person does not cost anywhere near that.
There's your answer right there.
I do want to point out that 40% of my revenues come from property tax, 40% from local income tax. As Mike was telling you this morning, in 2029, we could see some changes with local income tax. So as long as you, this governing body would keep that tax levy the same in 2029, that's what I would need to keep the facility going and be able to fund the great program that our county residents have come to expect. And I'd love for you all to come and visit anytime you want to come drop something off or come and look at the facility.
You guys, I've used you a lot in the downsizing of my house this year,
Good.
so you guys were great.
Great. Thank you so much. Any other questions?
I have a note on here on my budget side that you have 8,000 budgeted for utilities, and that's included in the 250.
So that will also get reduced for 2027. This was all in the lease. The utilities will actually be paid for by County General.
Great.
So that will be a zero. That will be extra that we'll have to apply somewhere else or put back into our savings.
Perfect.
Yes, that's a good point. Thank you.
Do you know how much cash on hand you have?
About 2.5 in the bank in savings. So we get about 2 million. We have 2.5 that's in the bank or in savings. we get about 2 million in revenue, and it costs about 2 million to run the facility. So we're right at keeping that. We're gonna have to eventually start digging in the savings, obviously, but we do have a good enough buffer to make it a long time with that savings.
During the recent flooding thing, the recycling center will take refrigerated freezers, which there was a lot of. I actually donated 3 myself, and they suspended they charge you $20 for bringing in a flat screen. They suspended that.
Through September.
September.
Yes. We don't want to charge people who are already in a bad position. So we've seen a little bit of increase from the flooding, but as this body may well know, they have hired a contractor to do the curbside, so that has.
Yeah.
But we plan to pick up the crumbs. Anybody who wasn't able to participate in that curbside program to bring us their stuff for sure.
Anybody got any questions? Thanks, Leslie.
Thank you, guys.
Thank you.
Let's go to the next page.
It says
Convention
breaking.
and Visitors Bureau.
Here.
Morning.
Good morning, Karen.
In your package, you'll notice that we've submitted a budget that is actually 20% less. It's a reduction, and it's because of the new legislation that we have in front of us that requires distribution differently this year. So that's what you'll see. So it's not a reduction in the visitor economy. Visitor economy is actually growing. It's very robust, and we've had some really high-performing indicators. So what you're seeing, the reduction is just because the new distribution model.
Any questions for Karen? Long trip for a short presentation.
Is that it? I can talk about how great our staff is doing because
we believe you.
Thank you.
Thank you.
Thank you.
Council on Alcohol and Drugs.
Finish all these before lunch?
Thank you for squeezing me in.
I don't see that.
Jason's here.
I know, I think it's Parks in here.
Well, I don't have an increase. I followed the guidelines on budget development, and I've not asked for any vehicles.
No new people?
No new people.
There's an A+ for you.
Great.
Anybody got questions? Thank you, Monica.
Thank you very much.
Here's one we can really cut on. Health Department.
That's true. I didn't bring that up.
Morning, Jason.
Good morning. I was getting mentally prepared to be here after 1:30 and got an email that said, "Get over here." So I'm here. So we'll try to go through some things. Tried to, same thing, follow our good budgeting instructions, though this year. And actually, we have some new positions to request as well as some reclassifications. Some of those reclassifications I was
You're
hoping.
asking for new people?
Yes, I am. And I have 5 in 1159, 2 in my 1161, my state
Which
fund.
one do we pay for?
We pay for 1159.
Which one does county general pay for?
1159, that's my health fund.
How many?
5. One of those 5 is, hopefully if approved, would be the reduction of 2 part-time positions into 1 full-time position in my clinical clerk position. And then we're also reducing out one of our part-time nursing positions that's currently vacant, has been, and not going to refill it, hoping that could help us with some budgeting for next year. My positions that I'm requesting in there, as you all know, the growth in the county is extreme, and particularly for us. In 2019, 2020, we saw actually, and not just COVID, but we saw reductions in some of our activities with the city of Fishers and the loss of those. Well, just for a greatest example, in our food services. And right now in 2025, we are actually higher in our numbers than what we had in 2029 or in 2019 pre-Fishers Health Department. We are actually growing and exceeding those numbers and regulatory businesses that we have to manage. So two of the positions that I'm asking for is a food supervisor and a foods compliance specialist, which will also help us in water quality compliance. These are dedicated positions. Up until now, we have ran on what we call general environmental health specialists. So they're kind of like a Swiss Army knife, and that we use them for every program that we have. But because these programs are growing so much, we need to get, and also regulations have changed on us, that we need to get dedicated people in there that can really be focused on just our foods programs. So those are kind of it in a nutshell on those. And the 1161, which is our state local health fund, which actually funds about 20% of our department and our employees. Of course, we saw reductions in those state fundings, but we figure that we can probably do 2 more positions out of that. And that's for our water quality program, because same thing, with every subdivision that goes up, every hotel that gets built, every water park that gets built, it's more water quality programs that we're having to do. So that program has definitely expanded and grown over these last 5 years, and we're seeing those numbers again higher than what we saw before the COVID pandemic and Fisher's Health Department kind of leaving us as jurisdictional responsibilities. So those are kind of the positions that I'm asking for as far as new positions. The other positions that I have are some reclassifications. Some of those things I actually wanted to do in 2026, but to avoid coming in for any kind of mid-year reclassifications and changes, held those back, got those job descriptions all updated, reviewed, and are coming for 2027 budget. Hopefully get those positions accurate to the positions that are
Are
currently.
you buying vehicles this year?
No new vehicles this year.
Okay.
Has your space, have you found more space?
Still kind of working on that, and as well as with, having some communications with Shepherd Center as they're looking for some space to what we could do jointly. My building right now works very well for me as far as how it's constructed and built for my nursing side. But what we'd like to look at doing is potentially moving out our education and outreach division and our 2 preparedness people out of our building by getting those 7 or 8 people out that do a lot of the field work outside of theirs. Actually frees up a lot of space for these new positions that we'd like to bring in on our environmental side.
So you don't have a place identified for that?
We're looking into some spaces, don't quite have it yet, as we're looking into some things, and then of course as everything's gone on with growth in the county, kind of said push it off to the back burner a little bit and kind of trying to address that.
One thing, this is actually for all of the departments that asked for new positions. I think last year I probably did a better job of asking. But when you think through the 5 positions, and I know you talked about reduction of 2 part-time to 1 full-time, and then the vacant nurse position part-time. Is there a ranking where you say, of these 5 positions in the one fund, I really, like, these 3 would be my top priority? Because we have a lot of requests.
Right.
So are there specifics that you could say, I really need this?
Most of these positions that we looked at would probably be internal promotions as well. So it actually gives me structure within my department.
Okay.
So likely if I had to reduce out a position would actually be one of my Swiss Army knife, my current existing general environmental health positions, instead of rehiring that as a person moves up, because I definitely needed the dedicated food ones. Another one that I would probably potentially reduce that I know I have brought in there is the part-time water specialist that's on the 1159 budget. I could probably live without that one. But honestly, I'd probably be coming back again in another year or 2 asking for it. But just the growth is just killing us.
Okay, thank you.
How has the flood impacted your ongoing?
Well, I think after I recorded 115 hours myself, the least for what I recorded in the last 2 weeks, it's going. We actually continue, that's actually really environmental health is really where it kicks in as the floodwaters go on and recede. We still continue to do lots of water testing with wells as people are starting to get that back in. Tetanus, we're actually doing another tetanus event up in Riverwood tomorrow night, trying to catch the evening folks as well as birth certificates, offering that out that we've done. Mosquito control is always kind of an interesting one. They're going to be bad no matter what. But we have tried to extend out some of our zone ranges that we're doing. Not only as we're focusing on our West Nile virus, but we're working the river corridor to kind of expend up so that we can keep the West Nile done. As a matter of fact, staffing that we're kind of, I won't say struggling with, managing our hours. But I'm even taking a shift tomorrow night to spray to help us out.
I know the mosquito was one I was interested in, so, okay.
Oh, they're brutal.
Yeah, well.
We're in a hatch.
Stop by my house if you wouldn't mind, that'd be great. I'm joking.
We're about 6 weeks out from probably our first frost where they'll get better, but lower daylight hours and cooler temperatures will start helping us as well.
I would say the same to you. I've seen, at different events throughout this flooding, the health department has been front and center, working hard, countless hours, same as EMA, and very impressive, so.
Thank you.
Yeah, I'd echo those same comments. Any update on the E. coli measurements there in the White River we talked about when we were in Riverwood?
I will probably have that for you tomorrow. I believe today they are collecting another round of samples. We did step up some additional little sampling last week to kind of get us a baseline as we were looking towards reducing down the kind of the red water alert that we had. But we're also taking another round of samples in those same spots this week. And hopefully they'll be down okay too as well.
When you tell Mark, don't tell me. I spent a lot of time over the last week and a half in the White River. I'd rather not know how much E. coli I swallowed.
Honestly, the message doesn't change ever, regardless of levels. There's always going to be something in open waters like that. So it's basically make sure you're washing your hands, taking a shower, and cleaning your pets after you're in the water.
Mm-hmm. At one point, it was up over 100,000.
Yeah, we've had collections where I think they're around 1,100 and a little over 2,400. When we deal with sometimes with direct discharges, when we're dealing with septic systems and those kinds of things, we'll have counts in the millions, but it's still there. It's just showing that we got that presence there. Don't drink the water.
Don't drink the water.
Anything else for Jason?
Nope.
Thanks, Jason.
Thank you.
Thank you so much, Jason.
Mm-hmm.
Parks.
Hey, everybody's moving fast today.
That's right. We run a tight ship.
Right. Yes, sir, Mr. President. Our budget request in 1178, we are not asking for any increases. 1179, there are no increases. 1219, which is the majority of our budget, we are asking for increases there. We're looking to bring on board Seven Streams Park, as well as the Burr Oak Bend. That's another park to bring on board, as well as the 44,000 square foot indoor archery facility. So those increases across the budget show those increases for utilities, and it added programming and needed services, et cetera, for those facilities. Also in there is 3 replacement vehicles. So we would not be increasing that inventory. We just be replacing 3 of those vehicles as well. We do have 3 full-time staff members that I am requesting for that, 2 maintenance and 1 naturalist. I do understand this time of season, so we would like to keep 1 maintenance and 1 naturalist. The Taylor Center of Natural History only has 1 full-time naturalist or staff up there, so and we operate 7 days a week there, so we'd like to get them some staff there that's full-time to help with that programming, as well as also they'd be working over at Cox Hall and at the new parks at Seven Streams and Burr Oak and throughout the county. So as our demand continues to increase, it's increased about 35%. We're up to about 1 million visitors at our parks. And so that demand continues to increase with all the activities and tourism, et cetera, throughout the county, so which is positive. So we're just trying to keep up with the demand there. So any questions?
How do you estimate the million? Is it the geofencing with their cell phones, or how do you get that number that you have?
Yeah, that's through Placer AI.
Okay.
Placer AI, it's sort of like geofencing, et cetera. We partner with tourism to be able to get that data.
Yeah. Okay.
Yeah.
And the campgrounds fare with the flood?
The campgrounds had some damage. Our back storage facility with our, where we store our mowers and equipment and stuff, basically got knocked off of the foundation. So we're gonna have to replace that. We're gonna put it up out of the floodplain, so we're gonna need to replace that. We had a lot of, some of our electrical pumps get fried, so we're already have replaced those and we're up and operational, so.
So we don't have to worry about additional budget items to.
There should be no budget items in regards to that, so we'll run it under insurance, et cetera, so, and we've submitted all that. In regards to, damage from the flood, we also have Potter's Bridge, so that was inspected. And we have some minor damage there, so we are permitted to open the bridge for pedestrian use. So we were happy to see that the current and the preliminary inspections were minimum. So we'll be working with the engineer to come up with a plan to fix those minor issues that we need to take care of, so.
Any damage in Cool Creek?
No. Unfortunately, it was odd. Like Cool Creek didn't have any.
Well, I can tell you why. I built a regional detention facility there that basically got rid of all flooding in Westfield when we had that blowout at Grand Junction. That was a big stormwater project.
Thank you.
It was, the city had to solve the problem, but I mean, that was, as we look at those types of problems I get with Gary, I think that's a huge benefit to our development.
Yeah. And I mentioned the surveyor, you know, as we discussed some of the floodplain and sort of retention and stuff like that, you know, what could Strawtown potentially become a potential opportunity because we have levees around it, and we did have some bank stabilization bank there that got eroded, and so it took out some of the levee, and so we held some of the water, but I said, hey, let's discuss what that could be as an opportunity to retain some waters to help downstream flooding and stuff for the city, so, yeah.
You've been always very proactive in going after new parklands, and with Seven Streams of Burr Oak and Acorn Farms coming on. Are there others that you are like pursuing that we don't know about?
There are the ones that have been on our radar for the last, I don't know, 5+ years. And so those are still sort of sitting there, and we keep the conversations going. So a realtor just recently called me last week, and I passed it on to the commissioners that they are selling their property right now. So a developer, apparently their partnership with the developer went bad, or they didn't strike a deal, so this property is now available. So we got a call from the realtor, so I passed it on to the commissioners, and we're gonna have a conversation, so.
I put this like it with the highway stuff. We don't know what's coming on, and then we're presented with it. We have to fund it, which we support the highway efforts and yours as well, but we just need to know and plan accordingly.
And as part of that, Mr. President has asked for a continued list of projects from the Parks Department, and I'll get that updated with the land acquisition and get that over to you guys for the future, so you can have that as a reference tool.
And if you wouldn't mind, and bring in Kelly in that so we can include that in our major projects list.
Absolutely. Yep.
I have a question related to, we had untabled, there was no motion in the June meeting for the specific reclassification, and then it looks like you made that request then on June 18th. I just want to, were there any additional adjustments, or are you just putting it back in there to have it reconsidered?
That is in the 2027 budget for approval, yes.
Okay.
Yeah.
Thank you.
And we've been working with Todd. Todd can speak in regards to that. If you, I don't want to put him on the spot, but trying to make sure we're getting everything right.
Any other questions for Chris?
You know how much cash you got in the bank?
When I checked, we were probably around 7 million, including all the different funds that we have, 1219, 1179, 1178. So about 5 million in 1219. Don't hold me to those exact numbers, but I looked at those before I came over. Yeah.
Did we get clarity?
And we're working on the cash flows we've talked about in the past with the auditor as well.
Second half of next year. is-
Yeah, well, that was the question I was gonna, like, these park receipts that are getting deposited into the non-park,
Non-reverting
non-reverting fund, like, just, it may, obviously, we need to talk further about this fund overall, but, cause the non-reverting fund, what was it, 13.4 to 9 million? Sorry, I'm just reading my notes, but for the non-reverting fund, 13.4 million to 9 million. I'm just looking at my notes. Low cash balance, 1.1 will not likely get you to June for next year. Temporary loan from rainy day. Okay, so we just need to talk more.
Right.
Yeah.
Yeah.
I'm good.
Anybody else? Thanks, Chris.
All right, thank you.
Coming in early. Let's say we take a little lunch break here.
Sounds like a perfect plan.
I'm gonna sit next to my coffee breath.